to the show, Trader Friends. It is a bright and, well, it wasn't so chilly this morning, which was quite nice. Wednesday here with myself and Ronnie Eggnog. Welcome,
Hello,
Ronnie.
Angie.
How was your evening and this morning?
Well, it was a good one. It was a bit of a long day in the office, a lot of stuff going on in the markets.
It was so busy yesterday.
Yeah, phones ringing, but that's what we like. And I think at the end of the day, we have President Trump to thank for the volatility. So we shall not be ungrateful.
Yeah. And everyone I've spoken to across the city have said, it's like no rest for the wicked. Every day is different thanks to Mr. T. A good morning to all you people out there. Hope you have had a good start to the day. Certainly, I was pleased when I ran across the bridge that it wasn't raining. Good morning, Gavin Ackers. Good morning, Monkey Man. Also, David Boys, good morning to you. Ronnie, do you want to read some of the chart? Do you want to put up these comments, guys?
There we go. Okay, Gavin Akers, they stopped giving AI chip. What? Which one should I read?
Read the coming up then, and then we'll go to the comments. Here's the coming up.
All right, coming up. We have Psychology of Trading with the very brilliant Isar. I'm not going to attempt to pronounce his last name because that would be an insult to him.
You got great prono.
Batar Charaye.
Yeah.
Sorry if I insulted you. 8:58 a.m. We have all sessions opening bell with the man from the Smart Portfolio team, Aaron Bright. And following that, we have my boss, the big scary Tom Robert, who will present trade expectations at 9:40 a.m. And then 10:05 a.m. following him, which will be a tough feat, of course, will be Michael Taylor with mid-cap focus.
Nice. And Issa is going to be talking about something really super helpful to all of us, what to do in times of a lot of noise and volatility. From a trading psychological front. So let's go across to overnight action because so much has happened. We'll be right back. Hey, welcome to overnight action with Ronnie and myself. Let's kick off with the markets because boy, was it wild yesterday.
Yeah, it was. It's earnings seasons mixed with Trump season. So we really have, a little bit of everything going on. So it's been ups and downs, and it's not small swings as well. So it's big swings in either direction. So it's a lot of stuff that's been happening. So I'm quite interested to see what the overnight headlines have been.
Let's start off with one that we talked about earlier. The whole, I was quite tickled by this. It was the front of the FT, and I feel like Trump is. You got to give it to him. He's so prevalent that we had those comments overnight, which have now changed to crypto. But overnight, it was him saying that we're going to. Was it fix Gaza? We're going to be in Gaza.
Yeah. No. So they have decided to, or not decided, but Trump's proposal. Which is very Trump-esque, and following the footsteps of his son-in-law, Jared Kushner, who initially said that when he thinks of Gaza, he thinks of potential of wonderful beachfront properties, which is, I'm sure that's what the people of Gaza think about as well.
I'm sure they took that well.
Yeah, absolutely. A lot of emotional intelligence visible there from Jared. And then his father-in-law, Big Donny, he has suggested now that the US will take over Gaza and they will renovate it, make it brilliant and make beachfront properties and make it a beautiful Middle Eastern Riviera, as he put it.
Yeah, and then this is the cherry on top, right? Was that the comment when asked, what's going to happen to the people that are living there? And I think the comment was the population would be resettled.
Yeah, because he said that so many of them have already left. So they can now rebuild it. And that's partly why when he stopped all US foreign aid, the only two exceptions were Israel and Egypt, who's taken in a lot of Gazan refugees. So I think that's part of his plan. Once a real estate developer, always a real estate developer.
Yeah, it's always a business with him, which is also kind of why I wasn't surprised when there were comments swirling that he wants rare earths from Kiev in exchange for aid, i.e. weapons. So he's saying, reportedly been saying that, we, in return for aid, i.e. weapons, you need to give us some of those rare earths, that is needed in all things electronic.
Yeah, I mean, it's very much playing a big part of the sort of Cold War of technology, if you will, that's going on now. And Trump is trying to build his allies, and this is his proposal and part of his plan to end the war in Ukraine. So if Ukraine agrees to it, I'm not quite sure, most likely. I mean, for them, it's a pick your poison type of situation. And I don't think Trump is very interested in the wheat that the Ukrainians have to offer. So the rare earths are more attractive to him.
Let's quickly go on to crypto, because we've had huge moves. Many of our trader friends, just a reminder, everyone, that it's only for pro traders here. But obviously, everyone watches this like a hawk, because it's really become like a mainstream commodity now. It moves with the market.
Yeah. I was talking to Chris Beecham yesterday, and I was kind of pissed. I was saying, Chris, yeah, fair enough. This was when Trump came up with the tariffs. I said, yeah, everything is falling. Fair enough. But why the hell are my crypto positions taking a beating? They should be on alternative assets that's uncorrelated with the market. And he said, well, this is the problem with adaptation. Everybody wants mainstream crypto and adaptation. But when you have that, it's linked with the markets and how they move with the mainstream market. So if the asset class goes mainstream, so does the movements. So that's the sort of the double-edged sword of going mainstream. Yeah, you get more volatility, you get more volume, you get more trading, but you also get more correlation with the market as well.
Yeah, exactly. And so for those of you wanting to diversify, like Ronnie Eggnog here, it's being marked. It's being marked and judged like a mainstream asset as well. Just checking in on Ethereum as well for you, or Ether. That is currently looking like this. It did rise more than 4%. In other news, of course, the whole tariff front, we seem to have reached a slight pause. I was speaking to Matt Alba yesterday, and he said it was almost like, Trump and co decided, wait a minute, whoa, the US 500, the S&P 500, and they're all reacting. Maybe we should hold off for a bit. Now there's a pause. So which camp are you on? Are we going to see him crank up the heat again? Or has he decided that actually markets react too much? I'm going to pause for a while.
I think this is sort of the essence of Trump. He goes in, he says these bold statements, and he does these crazy actions because he wants to give himself leverage in negotiations. So he'll go to them and he'll say, listen, I've already put it in once, I can put it in again. And he shows that he's someone that you can't really, the only thing you can trust and expect from him is the unexpected, so to say. But it was interesting to see that he actually went ahead with the 25% tariffs right away, because what's his title? Scott Bessent? Is he Trade Secretary or Treasury?
Secretary, I think.
Yeah, so Secretary of Treasury, I think, is Scott Bessent, the former George Soros associate.
Secretary of the Treasury.
Secretary of the Treasury.
I remember not having so many words, it doesn't roll off the tongue.
Exactly, yeah. So the former Soros associate, he suggested that they start off with 2.5% and then slowly build it up to 25%, which would be the end goal, in order to give the companies time to climatize to this new environment and adjust and focus on the future, how they can proceed with this. However, Trump said, no go, homie. These are bad hombres, bad hombres, and we're tariffing them 25% straight away. And like you said, then the S&P 500 took a massive dip, and not just the S&P. Pretty much all of IG was just red. Every index that I looked at was red. We all know that he's very, very careful in watching what the stock market does, because he sees that as a reflection of his own performance. So therefore, I do believe that we'll go back to tariffs, but more of a Scott Bessent type of tariffs, where we gradually increase them up.
Right, that's all good stuff. He was also, I think, from the Soros fund previously, so really business orientated there.
Yeah.
Let's go through some of the news that we had overnight. Obviously, we saw the US dollar sliding after the tariff threats. It was suggested or interpreted there's more saber rattling for now, rather than an end goal, as you rightly said. Gold prices also did regain all-time highs. We can check on that a bit later, but earnings, very interesting overnight. Do you want to start off with Spotify, maybe?
Spotify. I'll go to my beloved Swedes. We're both from Stockholm, both me and Spotify, I might add. So Spotify had their first ever full year of profitability. This has been fueled by higher cost for premium packages, and they've also expanded their offering into audiobooks and podcasts, which they've put a lot of focus on lately. So by not only growing the user base, but also growing the cost per user or earnings per user, they reported their first ever year of profitability, and I think they rallied 13% yesterday, which was brilliant to see. Right. And a patriot like me was really happy to see it. Were
you punching the air and putting on the mood music?
Yeah, 100%. Yeah.
Are you one of those people, Ronnie, that have like special playlists for different things? Like, so playlists for PCM desk, playlists for returning home. I have a friend who's got cleaning playlist, shower playlist.
I don't have different mood playlists. I don't have different mood playlists, but I have a lot of different genres. Very diverse music taste as a man of culture. So a very diverse Spotify range.
Fred is saying US earnings playlist, please. Yes, AMD. Loving that. AMD, one of the biggies is, well, I felt slightly vindicated.
Yep.
Because you guys heard me, trader friends, saying that, if I had money to to buy the dip and all that, it would still be Nvidia, not AMD. Let's just whack up the chart here. Ronnie?
Yeah, I think for AMD, it was more of a sigh and a breath of relief more than anything that they beat expectations, because analysts had been downgrading them, saying that these guys are not really a competitor to Nvidia. They're too far behind. But them coming out and showing that they can beat their estimates, they can continue to grow, and they continue to invest in R&D to further expand and be well positioned to be a competitor to Nvidia. So balancing that with better earnings was very positive news for the company. Now, if we look at the chart, it's not a beautiful sight.
Nope.
But I think Lisa Su over there has done a terrific job in turning around the company, and she's well positioned in order to continue, move into the new market that we're going to, the new environment that we're going to in this sector. So I think she's well positioned to continue start a rally. So I'm very bullish on AMD. I think it's a well-priced company.
I agree too. I think she's done a remarkable job. However, it has to be said, it's really a far way off where it is right now from the highs seen in March last year, where it hit at its highest point, that 22,815 level. But for me, Ronnie, it's all about those data centers as well. Looking at what they say in terms of those AI PCs, they're trying to expand their AI PC base. But the problem with this is it puts them against loads and loads of competition.
Yeah.
Right? And so until I see, either some headway in terms of those AI PC sales, or that it's coming up with something that can take market share from NVIDIA and create a hole in that moat that NVIDIA has created. To me, this is still downward. Palantir, my goodness me.
I love Palantir.
We talked about this yesterday. I loved Ronnie's analogy of Palantir. Go on, tell them the scary and then super interesting.
Philosophy of the company, very scary. I think the CEO said every day he wakes up with the mission on how to crush America's enemies, which is interesting for a big data company.
In his Iron Man outfit.
Yeah, exactly. But I do think and know that Palantir as a company and the services that they are extremely well positioned to they're poised to benefit from this new macroeconomic environment that we have, with cost saving is the theme and the US government. So analyzing big data is something that is very, very important for them. They have almost every single US government agency except for the US Army as a client. And then this is only the public sector. They also have the public sector in the UK. They have a 430 million contract with the NHS. So as we grow with AI and just this continuous use of big data, Palantir are perfectly positioned to benefit from this, because that's what they do. They analyze big data, they make it digestible. So Palantir is perfectly positioned for this, for the big data and AI, and also for the cost cutting under Trump. So Palantir is a high quality company.
Just a reminder for those of you that watch the space, Palantir, of course, rising after its forecast, which was upbeat. They said they're looking at a stronger annual revenue thanks to its software and data analytics. Right, gallery. Let's just have a look at some more questions. How much time we got, guys? Okay, well, we got 8 minutes. Alphabet. Let's have a look. I was very encouraged by Alphabet as someone who's got A and the C shares. However, it was a down day for Alphabet overall, and I think it was unfairly punished.
I agree. Alphabet was unfairly punished. I'm going to bring up my cheat sheet here on the segment growth. So if we look at Alphabet, so what really stuck out to me was that Google search and ad spend had grown 13%. And while others are competing, in the AI sector, people using Perplexity, people using OpenAI for search instead, but they're still consistently growing in this. They also grown 14% on YouTube ads. They grew 8% on Google subscriptions, platforms, and devices. They gained 30% on Google Cloud. 30%.
I know.
But that was not enough.
It was not enough. And the cloud segment was what I was looking at, Ronnie.
Yeah.
And I was poised and I thought, better hang back to see the reaction. And it's a good thing I did, because, down 5%. I thought this was the kid that did everything right. That did all the, exam prep questions and did a great job, got a good mark, but still
I think
was not rewarded.
Cloud is something that you're not the only one looking at cloud, and it's every analyst and every sort of asset manager. Cloud is the main focus of everyone, what they're looking at the moment. We saw the same story happening with Microsoft when Azure, it grew with 30% as well, something similar, but it wasn't as high as expected or as wanted by the market. So with cloud growing significantly, the sector, it's a much needed sector that they need to grow. So, and 30% is not enough. The market wants more. They missed by 1 billion, but it's a bit unfair, as you say. And also, they have said that they're raising their capital expenditure so they can deal with the further demand for cloud. So the issue is not demand. The issue is supply. So, and I don't see how that's not a bullish signal to Google on Alphabet, that they're well positioned to benefit from this. Just have some patience.
Yeah, the only one thing that I was thinking of that could have kicked Alphabet, but it would have been too soon, so I'm not quite sure. Monkey Man, Dale's boy coming in and saying that you have to really be good in this tough market. It's a tough market at the moment. I'm just wondering whether the whole kind of, Trump tariff, Google thing kicked Alphabet in the teeth slightly, but it would have been too soon, right?
Yeah, I think so as well.
PayPal, also, speaking of kicked, PayPal was whacked.
Yeah.
Down more than 12% there. Let's have a look at that chart. There we go. This is the daily chart there. I mean, we're back at levels not seen since November. And, PayPal is one that I have a slight fondness for because it's one of the companies that I use. Do you use PayPal when you pay for your stuff?
No.
What do you use then?
Apple Pay.
I use Apple Pay too, but I still use PayPal.
Yeah, I'm not a big PayPal fan. I think what they've done is they sort of they haven't really grown with the market. The acquisitions that they made haven't really been smart in the sector. I mean, yeah, they purchased iSettle, the brilliant Swedish company. But beyond that,
I love how Ronnie's pushing all the Swedish companies here.
They bought, Honey, which turned out to be a big scam, the coupon company.
Yes.
And they're not growing in terms with, what all the other startups are doing in the sector. So the payment processing sector is massively imploded with all these startups like Klarna, Iden, Stripe, and their competition is so hard, and they're simply just not hanging on to it. So I'm not surprised that the growth is shrinking and the margins are as well.
Yeah, totally. PayPal has got a lot of competition out there, you're right. Let's take a look at some of the European earnings that are out already. Out the door, GlaxoSmithKline, or GSK as it's expensively rebranded. One to watch this morning. GlaxoSmithKline forecasting sales this year will grow 3 to 5%, beat on the Q4 earnings front. Also says it sees strength in its HIV and oncology portfolio.
Yeah, I mean,
I think it needed this, right, Ronnie? It needed to kind of bolster other bits of its business when the whole COVID vaccine glow is just fading fast.
Yeah. So I mean, they are quite in a difficult spot because they're very vaccine heavy, and with the new health secretary RFK coming in, he says he's not anti-vaccine, but he's very not much pro it. So the environment that they're operating in now is quite strict. And if you look at the stock, like it's sort of like a rich stock, I'm sure Rich loves it. Just moving sideways downwards. So the problem with these massive companies, for them to adapt and change, it's taking a lot of time. It's like moving an oil tanker. And they dragged AstraZeneca with them down as well. They dropped 2.2%. So GSK and AstraZeneca, I'm not super bullish on those two or the sector in general at the moment. But in Europe, sectors that I am bullish on is the banking sector. We saw Crédit Agricole. Fred will have to forgive my French pronunciation.
Go on, say it.
Crédit Agricole. They had a pretty good result.
He says très bien.
Très bien. Merci, mon ami. They had a 27% profit jump, which was really impressive to see. That's sort of been the theme, right, this year, that the European sector isn't hanging on with the American sectors as they're outperforming, but they proved the opposite now. So they rose 27%. Their profit rose, and Banco Santander rose as well with their profits.
Let's have a look at Banco. They're whacking that up now.
Yeah, look at that beauty. So Banco Santander is very much in a similar position as Citi. Bit of a Citibank, that is, bit of a conglomerate in their sector, and they need to trim down the positions, trim down their sort of exposure, and they've done quite well with getting out of certain markets that aren't performing well. They're even thinking about leaving the UK, actually. But Crédit Agricole and Santander are two banks that did really well in Europe.
I mean, the thing about this chart is that, it is a beauty. It's like a real sort of climb since December 2024. We've seen it trade sideways, but look at that breakout. right?
Yeah.
And now I'm just trying to get this further back for those of you that trade Banco Santander. We're also near a pivotal point. We're watching for another breakout. People, trader friends here, if you're looking for one that you want to watch for a breakout, this be it, because if it breaks out past the level last seen in April, then we could see another leg higher. 30 seconds to break. Any others that you like and looking out for?
I'll squeeze in a quick European one. Novo Nordisk, the Danish enemies, but I do like Novo Nordisk. Just got the Bloomberg first word. They reported better than expected sales for the fourth quarter and provided guidance for 2025, which was also ahead of analyst estimates. The shares are up on Tradegate before the European market open.
Nice. I'm glad you're more gentle on your Danish friends, because I have a pension holding. I've got Novo Nordisk in my pension. Let's go to the break, because we'll be right back with the opening bell. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. Hey, welcome back. It is going to be a busy day with Ronnie Eggnog and myself. We are counting down to the open.
Yes.
And the big ones we're watching out for: Ryanair, SSE, Andrew McKelvey. We know you got your eyes on that. We'll get through that with you. Granger and BP as well. Ronnie, which one do you want to kick off with?
Let's see what we have about SSE. I know it's a rich favorite.
Yes, as well.
It's his native hometown. So
have you noticed he always puts like the Highland spring water here when you
that's brand placement.
Yeah.
So from the Bloomberg first word, we see that full year adjusted earnings per share is 154p to 163p, which is just on estimate of 163p. And renewable output up by 26% year on year, first 3 quarters. Business unit operating profit expectations remains unchanged. So quite interesting to see how they move ahead. They're doing, seems like they're catching up to their estimates.
They also said, sees variable weather conditions in particular, but I think it's the fact that its numbers were looking particularly upbeat will offset that. Taking a look at SSE's chart very quickly for you, Andrew, and also Rich, it is looking like it is turning up. It's done that tick, almost like a slight Nike tick there, and it is moving slowly upwards there. Now at the 1613 handle, last seen a couple of weeks ago. Just a few more seconds. The bell, get the bell, Ronnie.
Yes, while I get the bell, some quick, a visit to the east. Toyota raised profits 9% up. Honda.
Yay! Right, and we are off, people, and let's have a look at the movers here. First, we got pretty much risk off as we speak at the moment in terms of the indices, and also it's interesting to note that Germany 40 and the FTSE, normally a pairs trade to be had there, but they're both down slightly. Not so much so for the FTSE, which is the comeback kid of this year.
Yeah, it's as I said, the zombie has finally woken up. It's really interesting. It's fun.
Are you talking about some of the PCMs?
No, I was talking about the FTSE. I would never talk about my colleagues like that. But yeah, the FTSE has bounced back. It's now finally pushing up a little bit. It's giving back some of those gains, which is natural, and they're not alone in that. But hopefully, as the market recovers, they will be part of that as well. So interesting to follow that. And what do we have on the open?
Yeah, here we are. Let's go to the FTSE. My screen has flipped, but if you look at this chart here, Fresnillo, Entain, GSK. Let's have a look at GSK because that is moving right now, up 4.47% here. Really rising on those earnings there, and I guess investors taking heart that it's got other things in the pipeline to offset those.
It's showing that it has a diverse revenue stream, which is vital, and I think the markets appreciate it for a long-term sort of defensive play. Not me, I'll stay away from GSK, but I can see the attraction of it.
I have GSK in my pension and also AstraZeneca. Let's have a look at SSE to see whether we have a move already. Hardly moving, Fred? Just down slightly. Ryanair, another one that we've had numbers from this morning. Let's see. Traffic numbers, not much of a move there. Let's have a look at Europe as a whole. We're waiting on that. Germany 40. Let's cross over to Germany. Right, Ronnie, why don't you take us through the gainers there?
Yeah, so we see Commerzbank up slightly and Siemens Energy as well. They've had some pretty... Commerzbank is probably relieved over the fact that UniCredit has switched their focus to more domestic acquisitions rather than Commerzbank. So that's probably positive news. Siemens Energy has been a big uptick the past year as well. So it's interesting to see if we can keep up with the demand now as we're moving towards a new Trump era of energy. With the energy emergency.
What do we call this new era? I mean, like we've got like the automation, we've got the electrification, we've got this new era. It needs a new name.
Yeah.
Ronnie's going to think of a new name. Trader friends, think of a new name.
Monkey Man will help me.
Yeah, Santander. Well, so thinking of that name of this new era for Santander, up 5.7%.
Look at that.
There, look at that. And also, Santander committing to spend 10 billion euros in buybacks over this year and next year.
Oh.
Credit Agricole, another one I check on.
Rich will go buy some stocks now.
Yeah, anything for a buyback.
Yeah.
And actually, it's been a good year so far for buybacks, right?
It has, unfortunately.
Okay, let's have a check on Credit Agricole whilst we're on this banking theme. Credit Agricole, they're up almost 2%. Fourth quarter, beating the street. I think the estimate was for 1.4 billion, and we came in at 1.69, so beating that nicely.
Yeah, very good results from their side. They're doing quite well in sort of focusing their business efforts, and the profits are a reflection of that. They've sort of gone away from trying to do a little bit of everything to focusing their effort, which is a theme that we see across European banks, avoiding to being too thinly stretched. We see HSBC doing the same thing with their restructuring. So it's more of a time of focusing your efforts on where the profits are being gained. And yeah, look at the chart. It's being reflective of that turnaround.
BP as well out this morning with not earnings, but just news on Kirkuk. Let's have a look at BP. Is up slightly there. Not a huge amount has to be said. This is to do with Kirkuk as well. And interesting.
I'll have to step in there. So it's actually it's a Kurdish city in northern Iraq.
Have I messed up the pronunciation?
Yes, and it's pronounced Kirkuk.
Ah, there we are.
Hey, here to provide some value exactly
every single time. Yes. So the news there, of course, is the fact that how do I say it again?
Kirkuk.
Kirkuk. That we have had, just finding the details, they're going to spend $25 billion.
It's a strong,
yes,
over the lifetime it's a strong, sort of foothold in the oil of the region, and with the majority of the Iraqi oil being concentrated there. And it's been quite worried politically, but it's now gained stability. And BP coming in to be able to, extract the oil from there, which is I'm happy with, as long as my people also get a piece,
Ooh, look here. Ronnie's got some contacts there. Any of you want to ask at IG? Interestingly enough, they're also going to sink this development money into like gas fields as well. Just showing you the commodities space, because the natural gas market has come off slightly now, but it has been on a tear.
Yeah.
Natural gas, for those of you trading this on the IG platform, only until recently has it come off slightly. Just showing you the weekly chart as well there. It has come out of this channel recently. Keeping a close eye as well on some of the other Total Energies, because they're all linked in this space. And in fact, I've got a watch list here for oil, I believe. Let's see, where are my oil? Let's actually check on the autos. So BMW is down 0.8%, Volkswagen flat there. Some of these really did react when we had those Trump tariff news earlier on the week. Obviously, tariffs not great for the car industry.
Yeah, especially because the majority of automobile makers, they have their production, their North American production in Mexico, and then they ship it into the US and Canada. Mexico's biggest import into the US is automobiles, 130 billion worth. And if you slap a 25% tariff on that, that's going to dig deep into the profits of an already troubled sector. So the fact that they took a hit was more than expected. And hopefully, we can see how they've sort of positioned themselves to be better equipped to deal with the potential tariffs if they open factories in the US, or if they shift their focus otherwise. But they do need to do something drastically in order to improve from this.
The interesting thing is we saw lots and lots of manufacturers shift spare parts, especially in the auto sector, even before the weekend, right? And there was this whole big scramble. Trader friends, we're going to be talking about, how those tariffs are likely to affect markets going forward. Also, we'll be taking a look at in the confirm and send section. Thank you so much for sending those questions in about what happened the last time. Vodafone, we had a trading statement yesterday, so let's have a look at that. Rich is all over this like a rash.
I had a bit of a I told you so moment with Rich yesterday, as I came over to this side of the office to have my daily chit chat session with Fred, because he's my true friend, not Rich. So I came over and I saw Rich looked absolutely shattered, and I said, Rich, my almost friend, what's going on here? And he was explaining that Vodafone had missed in Germany and they're doing worse than expected, and the stock fell over 7%. And, I said, who would have thought? Not me. I would have predicted this. And I think this goes to show what we said before, that the focus has to be on, focusing your efforts on where the revenue is generated and the profits are gained. I mean, they're getting out of, they need to get out of the sectors where they're not doing well. And we saw BT had a 2-day meeting now with their new shareholder Mittal, who owns 25%. So the focus now is on profitability for these companies, and it's not to be gained by reaching every single market. It's to be gained by focusing your efforts on where the profit is generated.
And, doubling down on those markets as well.
Yeah.
But I'm sure Richard's listening in, giggling and dying to make his comments on the buybacks. Ronnie. So let's have a look at some other news that came in overnight as well. Just watching in the corner of my eye, this whole kind of Toyota, Nissan thing happening. You like the news about this fallout?
Yeah, I don't know. I don't have much of an opinion on it, but I was talking to Fred this morning about it. It was quite a hectic morning in the Asian sectors. So obviously the Asian automobiles is one that it's really, really, we talked about European automobiles for the tariffs, but the Asian automobiles are just as much in trouble as they are. Yeah. But Toyota raised profits and they raised their full year profit forecast and they gained 9% on this. And then we also had talks with the merger talks between Honda and Nissan. They have now switched from, the merger talks have stopped, but they've been replaced with acquisition talks. So Honda are now looking to acquire all of Nissan and make them a subsidiary rather than to merge with them, which could be a more interesting approach as they could sell off those less profitable parts of the company. But we also had Geely, owner of my beloved Volvo. They dropped 3.5% with underperformance from their part.
My turn now to go with the prono. So it's Geely.
Oh, not bad.
But I have an unfair advantage. I do go to the US quite a lot. But I am watching that very closely, that whole Geely, Polestar and all the, EV news, with Sweden and Volvo. Because I have stress tested a Polestar myself, Polestar 2, because I want to find out how it drives, whether it's going to be a keen competitor in the EV market. It's excellent if you want something that just does the job, gets you to it's a Volvo, isn't it? Under the bonnet, it's a Volvo.
Yeah.
Strong and steady, stable, like Ronnie.
It's so your words, not mine.
However, Geely, I have to say, if I remember correctly, have said not going to put any more money in until Polestar starts making money.
Yeah, and I think it's sort of the trend that we see with EVs, that they're not making money. It's not something that is profitable right away. It's a long-term investment, but it's a necessary one. A long-term investment in order to be in a position when the ban on diesel or combust engines comes in, they'll be well positioned, not having to start then. But speaking of EVs, Ferrari, who just released their earnings, who beat expectations and got up almost 3.5% on earnings, with the CEO coming in saying that demand remains strong, and for every demand of Ferrari, we always sell one less. And they are now revealed their plans. A traditional, proud Italian company has now revealed their plans of their first EV. But what's interesting about Ferrari is that over 50% of their cars that they sell each year are to people who already own a Ferrari. That's brand recognition, that's brand loyalty, and that's pricing power. And that's what separates them from these sort of, the BMWs, the Volkswagens of this world. Because if you buy a Volkswagen, you have no problem going to a Geely or Geely, sorry, or what's BYD.
Yeah.
You have no problem.
Be on your dreams or burn your dreams. Which one?
Well, burn Tesla's dreams.
Lots of Tesla traders out there watching this. I mean, Ferrari is a it's such a big brand, right? At the Frankfurt car show, the Paris car show, their stall is the one that everyone wants to head to. I mean, it has its own security system.
And now they've got Lewis Hamilton too.
Now they have Lewis Hamilton, which is such a steal because I have met him. He's such a nice guy. Such a nice guy. And his really good mate used to work at Bloomberg with me. And so he came to visit really super early in the morning, thinking that no one would be in. And I came running down because I had to be in to make sure I'm across what Asian markets have been doing and everything, and almost crashed face first into him on the Bloomberg glass steps. But he was such a gentleman, no entourage, very, very polite and
not expected.
Yeah, well, he's apparently a very
down to earth.
Yeah, down to earth kind of guy.
I'll tell you, if I was on his contract, I wouldn't be.
He is also being bankrolled on the advertising front by Petronas, which is the Malaysian oil major. So lots of stuff happening here. Let's just check in on the markets now because it's been so busy to see how things might have moved. Come back, kid. FTSE now flat. Germany 40 still down 0.5% there. Ronnie, what do you make of the moves on the other markets there? Expected or?
I think it's a time of caution now. We're sort of we have this 1 month where Mexico and Canada has bought themselves time. In the shade of this, the highlight was that they bought some time and they pushed the tariffs 1 month. They're still going ahead with the Chinese tariffs of 10%. But this month now that we're watching and waiting for what's actually going to come afterwards, I think it's a time of caution where people are not really comfortable with taking any big bets or something similar to that. So this is probably a situation where you would play some sort of option strategy to bet on still market. So I think in my opinion, I don't think the market is going to move any crazy way until we get some actual information on what's going to happen next month.
Nice. So we're in this wait and see zone. As you know, you can not just trade spread bet or CFDs here. You can also, on the options front, looking at trading these sideways, moves that Ronnie has been talking about. And on that note, we're going to go swiftly to confirm and send. Hey. Welcome back to my favorite part of the morning. Every morning we have Confirm and Send where we answer all your questions here. And if we don't know them, we'll go and find them for you and get it to you straight away and email you back. You always have that wonderful Arab underneath Ronnie's handsome beard there that says ask@ig.com so you can email your questions in. Ronnie, let's hit it off with the first one.
On Monday, several Fed officials called for extended pause on rate cuts. What does it mean for the dollar? So I've done a bit of historical research and dug into this. It doesn't take the first thing that I came to think was, okay, so a rate cut on the US dollars means rates remain higher for longer, which was to be expected. But what makes this attractive is the fact that other countries are cutting their rates. Almost every other country is cutting their rates. So with the US rate being higher and providing more returns in both the equity markets, but now we also offer attractive returns on the bond market compared to other places. So this is something that will be really interesting to watch there. And historically, I've looked, so during 2015 and 2018, during the Fed hiking cycle, the US dollar index rose 7%.
Here we are, getting the US dollar basket up for you.
Investors seek higher yields where it's to be found, and stronger dollar trends put pressure on commodities and such as gold and oil, and emerging market currencies who benefit from US imports and also have a lot of their debt in US dollar. So it's important for any trader to keep watching what the Fed comes out with regarding inflation data such as CPI, and to see if the dollar momentum shifts. But for now, if you're long dollar, you're in a good position.
What's also interesting is that we had that move earlier this year where after that climb from since Trump was elected.
Yeah.
You know, we saw the strengthening and the strengthening. She's going to show you the daily chart here. But then when we got to around the cusp of the new year, it kind of tailed off and came off slightly. Some in the market saying that this is because there's this sudden expectation that, you know, this tariff threat wasn't going to be as bad as everyone thought.
Yeah.
And now we're almost seeing this move higher, but corrected the next day, slight move higher. We've seen the latest correction being earlier this week. You know, do you think, based on what you're saying, you know, wait and see stance, you know, same for the US dollar basket, we're going to see this range trading, right?
Yeah, that's definitely what I think is going to happen. We're going to see range trading. We're going to see a reallocation of assets and investments into more of these sort of safe haven and positioning themselves in a more American inflationary economy, as well as a higher dollar. So I think that's where the markets are moving more defensively in that sense, until we have, you know, removed all this uncertainty that's to come.
Yeah. Also, let's hit up the next question, because we have, this is related to the dollar and tariffs as well. Second question, here we go.
How does rising inflation affect corporate profits and stock valuations?
Now, you see, rising inflation, I really think that we are going to see rising inflation, which is why I have a long dollar hat on. I do think the dollar will be strong and underpinned, because it's one of the hallmarks of, you know, Trump's office.
Yeah.
The other thing too is it has a real effect on commodity prices, and you get hit on both sides. One is production costs go up, right? You've got a stronger dollar and inflation as well. Production costs are going to go up. There's going to be higher demand for tangible assets, especially in times of uncertainty. So for me, looking at this, what that tells me, or what that signals, is stronger gold. So
yeah.
Just putting up my gold chart here, people, which I've got legs going in. But you know, you can tell that since Jensen Huang, you know, killed off. If you think he killed off that enthusiasm by making those quantum computing comments, or you think he took the froth off the market like I thought he did, then gold is still moving higher, and we could see potentially you know, more all-time highs being met. We're fast approaching that 3,000 figure.
Yeah.
Ronnie, what do you think about the question?
Yeah, so in terms of rising inflation affecting corporate profits and stock valuations, it's something, you know, this is where margin comes into play. When people look at the quarterly results and the earnings report to see how the margin is being affected. And this is, you know, for defensive stocks such as energy and consumer staples, they tend to overperform because we're still going to need these products, but these companies have pricing power. And that's something really important to look at a company. When you come into inflation, does the company you're invested in, do they have pricing power? And that's often something that is derived from either A, necessity, or B, brand recognition, such as Ferrari that we talked about. But in terms of, so we look at, you know, food, defensive stocks could be such as, you know, food, low cost clothing, housing that is necessary for, you know, that sort of survival, the human rights, so to say. So those are the kind of stocks that are important to look at when inflation is rising, because if they don't have pricing power and if they don't have a continuous demand, the demand will fall, and so will the profits, and they will eat into the valuations, as they will rather move their money. Investors will rather move their money to getting some safe returns on bonds or the dollar, whereas we also see the rise of alternative assets such as private lending from the bank, from the sort of private equity funds. So unless you see some actual, you know, data that can show that these companies can continue to raise their prices and continue to grow revenue, you're in a tough position if you have some sort of price sensitive products.
That's right. I mean, like, let's have a look at Walmart. You like a bit of Walmart?
I love Walmart.
There we go, Walmart.
Look at that.
It has been such an impressive time for Walmart since, you know, if you had it at 2015, good on you. You can pat yourself on the back because it is a beautiful uptrend there, right?
Yeah.
This is the monthly. However, like Ronnie rightly said, if inflation really rears its ugly head again and you have, you know, companies like the Walmarts, you know, like the Costco's, just punching up Costco's chart as well because I have a feeling it will be, here we are, Costco here also moving higher. If they start seeing inflation really start to get painful for their bottom lines, they will have to do more than match it. They are going to have to beat it, right?
Yeah, and if you look on the flip side, if you pull up the chart of Target, you'll see sort of where that gain of Walmart has come from. So you look at Target, that they're not doing really well compared to them because they're sort of mid-range. They're a bit more expensive.
I hate Target. Can I say that on air? I really hate Target. Not only are they mid-range, they don't seem to have like a unique selling points. They do a bit of everything.
Yeah.
And it's really, when you go into their stores, I feel like I'm confounded by too many things that are kind of screaming at you. Walmart has a flow and a USP, whereas Target, I kind of feel like you could go in and get tires one day.
Yeah, and we saw now, just now with the recent inflation rise, how consumers, mid-range consumers that used to go to Target or other you know, mid-range grocery stores, they've now switched to Walmart because they want to get more value for their money, as they realize that, you know, the products are mainly similar, it's just branding. So consumers are more conscious about their spend in higher inflations.
Right. So let's hit up the next question. We've got one more coming up. How does inflation drive commodity prices, particularly gold and oil? Oh my goodness, I might front run this one.
Yeah.
As you heard me mention earlier, you know, watch out for if you're looking at mining stocks, if you're looking at oil and energy related stocks, watch out for what they say about inflation hitting them on both ends. So the front end, which is higher production costs, right? Higher staffing costs, higher R&D, and also exploration costs. But it also hits them on the other end, the consumer. So be it, you know, whether you are you buy diesel or you buy fuel. If you are having to have less money in the pocket to spend on things, then you're likely to cut back on those sort of commodities. Ronnie?
Yeah, I mean, gold has always proven its worth as a safe haven. It's done so previously as well. So, for example, if we look, if we go back historically, way back, back when Rich was a young lad in 1971, from 1971 to 1980, when there was inflationary spikes, gold rose from 35 to 800, so between 9 years, and it was double-digit inflation growth in the US. So higher inflation means that you need something to store your value of your funds, and gold is a perfect asset to do this, especially now with, you know, crypto being correlated with regular markets. Gold is doing really well, and it's going to continue to do so. And I'm quite fearful that I'm going to lose my bet against Rich that oil will reach 3,000 before April. But in terms of oil, it's a bit more you know, difficult to look at it because oil in energy is something that is used regardless. You always need it, and it's sort of been classified as a safe haven or a defensive stock. But with the Trump emergency energy bill, where he's actively trying to halve the price of oil in order to drive down inflation, it's more of a cautionary view that I take on oil, as we're not completely sure what's going to happen. OPEC has 13 million barrels in oil just laying around. US are currently producing 13 million barrels of oil a day.
And more to come.
And more to come, which is at the highest level ever. The only thing that's stopping is the US oil companies saying it's not profitable for us to continue rising and increasing our oil production if oil is pricing below 80. So regarding oil, I'm a bit more defensive and cautionary on it due to the Trump presidency that's coming up now and his plans with it.
I mean, it's like bring out the popcorn and, sit back and enjoy the show, right? I mean, oil is going to be a fascinating one that will be tested. For me, oil is like trade the breakouts within the channel.
Yeah.
Because you have so many things in play, not just politics, but also OPEC Plus, who are now obviously not pleased by what Trump has said, saying that he'll get them to, pump more. Obviously, he does have leverage, but at the same time, these oil-producing countries, have to make money to keep their own populations happy, their own voters happy.
And also, just a side note on that is that the weakened demand from China, the Chinese boom. The previous Chinese boom that we saw, that was something that really funneled this demand. But we don't have that same demand, and we can see that it's being clearly reflected on the share price of these sort of commodity stocks. So without a strong demand from China and with increased tariffs on China, it's going to be hard to see how that demand is coming, with India buying oil from Iran and circumventing America. So I'm a bit cautious on oil.
I'm trying to get data, Ronnie, on these tankers that are being sent with oil, via Iran and China, because they can say, well, we don't want it. You can get it to turn back. But it's so super hard to get that data. And you're right, the oil demand there has been falling. Yeah. And if I had to put money on it, I would say it would probably fall further or stay the same, because as we know, China's been like really boosting its EV, LNG fueled trucks.
I would not be surprised if we saw oil trading at sub 60 before the end of the half year.
So what's the bet again? Remind our new trader friends who are here.
So my bet with Rich is that gold will reach 3,000 by April 2nd.
By April 2nd?
Yeah, I think I'm actually going to lose that one.
Oh, I think you have a winning chance. Come on, go. Right, I think we have one more question to go. Let's hit it up. How will US tariffs affect China's economy?
Yeah, so China is, they've historically and always been an export-heavy nation, and, without them being able to export, they've also always counteracted it with a weakened Chinese renminbi. So a weakened renminbi against the US dollar is something that we can see as a counteract towards this, in order for them to, circumvent the tariffs, so to say. But if we look back in 2018, 2019, when US placed tariffs on $360 billion worth of Chinese goods, their GDP growth slowed from 6.8% to 6%. And, they've historically responded with a yuan devaluation, but they can't continue to devaluate their currency forever. But the US tariffs affect China's economy just as much as it affects America's economy. It is the workshop of the world. The Apples, the Teslas, every single hardware tech company, they have production in China. If they decrease their production in China, they swift it towards America or something that isn't tariff exposed. We'll see, higher cost for American companies, and we'll see lower revenue for Chinese producers. So in the situation, it's sort of a lose-lose for both nations, in my opinion. But Trump
thinks... It's like game theory, right?
Yeah, exactly.
Game theory. Everyone loses. Everyone...
Exactly. But according to Trump, tariffs is the most beautiful word in the English dictionary, or maybe American for him. So US tariffs will affect China's economy by, slowing down growth, slowing down production. We've already seen a decreased consumption of commodities. We've already seen a decreased output in, manufacturing. So I think we'll continue to see that downward trend in China with the tariffs coming to place.
Also, not forgetting, extreme market volatility, how it also plays out. Most people watch the immediate impact, but actually you then have a shift in trade patterns. As we've seen China with the Belt and Road project. So they're shifting all manner of business, and people tend to not think about the tech super corridors that are being built by China as well, and so that shifted via places like Hungary, and places like Hungary is already their biggest base for building NEOs. And do you know why?
No.
Hungary is the only place where you can, from application to granting approval, 1 month for building a factory. It's the shortest application time frame for building a factory there.
Listen, Orban might be the only dictator in the EU, but he's doing something right.
Build a factory. And of course, the impact on business investment and flows. And on that note, thank you so much, Ronnie.
Thanks for having me.
That has been an incredible morning with Ronnie Eggnog here, talking all things investment, SSE, trade, oil. Hope you get to that 3,000 mark for gold.
I hope not, because then I'll lose.
And thank you for the pronos too. And we have Isa coming up next.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education. So looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Are you ambitious? A future leader? Do you think big? and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Hey, welcome back, trader friends, and we are here with Issa Bhattaji to talk about something that I am actually really bad at.
Oh yeah?
And that's dealing with emotions when watching markets go crazy.
Yeah, so I think in particular I wanted to talk about what happens when like adrenaline is coursing through your veins, when you see particularly aggressive moves and how that impacts your behavior.
So what is the trick? Because, you know, like DeepSeek on Monday.
Yeah. We've had a couple of Mondays actually. We had DeepSeek last Monday.
It was like late Sunday.
Yeah.
What is happening with the markets?
So I guess before we go into like what you can do, it's worth really understanding what's going on.
Okay.
So essentially what's happening is adrenaline is coursing through your veins. Adrenaline is one of 4 neuromodulators that we have in our brains that adjust our behavior. And adrenaline is kind of the fight or flight hormone. Mm-hmm. And in response to any kind of extreme thing you're seeing, your body basically starts to go, okay, we need to work out how to address this problem. In the olden days when we were kind of cavemen, if you saw a tiger, your body is going, okay, we need to work out what to do in this kind of situation. And so then your physiological response is going to change in response to that stress and that adrenaline. So some things that literally happen, which is kind of weird and most people don't know, is your brain starts getting less blood because the blood starts going to your muscles, because in a flight or flight kind of situation, you want to be able to like use and mobilize those muscles as quickly as possible. So literally your brain performance goes down because the amount of oxygen it's getting goes down. The second thing is your field of vision changes. So when you are in like a low stress environment, which is typically a high serotonin environment, the field of view that you see is very wide. And then as soon as you get stressed and adrenaline starts coursing, that field of view really narrows. And so the stuff that you're focused on is like, you quite literally get tunnel vision. Like that's in fact where the phenomenon of that comes from.
Right.
And then the third thing that happens is the way that we make decisions changes. And so instead of being kind of more deliberate and thoughtful, we tend to trigger what are called the fast and frugal processes of decision making, which help you make decisions very quickly under a lot of stress and pressure. And so all of those things impact your behavior. Like other weird things that happen is you start sweating, and you start kind of mobilizing different energy resources in your body. So your body is basically getting really ready for a fight. And in our modern world, where often stress is not associated with physical risk, we have to work out which aspects of that are useful and which aspects of that are not so useful.
So how do we tame this? How do we tame this, you know, fight or flight? I use lines, I use signals, I go, you know, and try and have that keep calm and carry on mode. I even have a focus shirt that says keep calm and carry on, as opposed to on. But you know, it's hard. It's one thing saying it, it's another thing doing it.
So I think there's in what you said there is really interesting, right? You said, how do we tame this?
Yes.
And I think there's actually 2 different approaches. Approach 1 is try to tame it and try to respond as rationally as possible despite that heightened physical state and emotional state. Option 2 is to try and lean in a little bit and work out, okay, when you are in a high adrenaline state, your body is responding differently to signals. That's actually not all bad, and some of it is really good. And so we're going to talk a little bit about both of those things. We're going to talk about how do you kind of try and make sure it doesn't impact your behavior so much, and then how do you make sure that when it does impact your behavior, it's positive rather than negative. So that first piece is about really trying to do two things, which are kind of perspective taking, which the idea of that is to try and mentally push yourself into a mindset that is less heightened and less extreme. So thinking not so much about like what's happening in front of you now, but kind of trying to think slightly further away from the stress generating stimulus. So there's two ways of doing that. One is called behavioral activation, and that's where you start to be quite physically present with what's around you. A good way of doing that is often spoken about in cognitive behavioral therapy is trying to listen to sounds that you hear or physically tune in to a specific physical response. Like if you're holding the table, trying to be really deliberate about feeling the texture of this table. This table is quite a smooth table, and so under my fingers you can feel that it's quite smooth. And so by doing that, I pull my attention away from the stress generating stimulus.
Nice.
And that can reduce some of those heightened emotions. So that's kind of one method that's called behavioral activation. A second method is about thinking about how you can build processes and systems around like the actual decisions you're making to avoid you making overly emotional decisions in that moment. So you might have, for example, pre-agreed exits, like stops or take profits. Those kind of things can be a useful set of systems so that you're then not making bad decisions when something kind of doesn't go your way or when you have a very volatile. And I think if you think of stress as negative, you will actually find it adverse and unhelpful. And there is an alternative approach, which is called a stress enhances performance mindset, which is where you think about using stress constructively to try and optimize your behavior. So there's 3 steps to a stress enhances performance mindset. This was actually designed by a bunch of psychologists at Stanford as part of a, it's called Social Psychology Answers Real World Questions. Is like the name of their team.
Nice.
They focus on how do you try and generate real effective outcomes from some of this psychology research. So step 1 is to be very good at recognizing when you are stressed.
Right.
So that's really, really important. So having a good understanding of like what are the kind of situations that trigger stress.
Do you know when you're stressed?
Yeah, and for a long time I used to wear, actually I don't anymore, but I used to wear a watch that would track heart rate. And it would be like, not an Apple Watch, but kind of the same kind of thing. And that would be a really useful ex-post indicator of when I'm in a kind of heightened emotional state, because at the time it can be quite difficult to realize, especially if you're not very good at recognizing like trigger points for stress.
I eat a whole Lindt bunny.
Yeah, well, that's good to know, right? Yeah, so I think
I don't normally eat chocolate.
Yeah, so I think that's good because that is a behavioral signal
Oh.
that shows that you are stressed. And so if you get really good at understanding, there's basically 3 types of signals. There's physiological signals, there's behavioral signals, and there's cognitive signals. So physiological signals are things that are like, when I get stressed, what does your body do? Does it get sweaty, or do you start to feel warm, or do you start to like feel a bit jumpy? I think my physiological triggers tend to be around physically not liking to sit down. So when I'm like stressed or I'm in like a heightened state of like of like intense high adrenaline, you'll often find me like standing or walking, and that is a useful like kind of physiological trigger for me to know that
Issa walks a lot.
I do. I pace a lot.
In the office, I often like we do the squirrel thing where I'm trying to find Issa, but he's
walking
the other
somewhere.
side, so I can't find him.
Yeah.
Even though he is in the office.
Yeah, it's good. I think my approach to work in general is to there's a great company called Shopify who I love, and their culture is great. And one of the things they talk about is burning more kilojoules per hour during the hours they're working, and that's like very much my approach. My aim is to try and generate more intensity in the hours that I'm working to be as effective and productive as possible. But yeah, so there's physiological triggers. Then there are behavioral triggers, which is stuff that you tend to do when you are stressed. So it might be food related, it might be to do with a specific piece of information that you tend to go back to. Like one thing that I often do is I start to actually look at my portfolio as a whole, and I zoom out. Like you can tell when I'm stressed because I keep zooming out on the charts. And like it's really interesting to know that, and it's worth being clear about what those behavioral triggers are for yourself. And then the third piece is about cognitive triggers. So what are the kind of things that you tend to think when you're stressed? Is it, oh, I need to get out of my positions immediately? Is it, oh, I'm stressed, I need to talk to someone else, or I need to get more information? Like wanting to get more information is a very classic stress-related cognitive response. And so I think working out for you specifically what are those trigger points is a really good way of recognizing when you're stressed. The second thing is working out why you're stressed, and I don't mean that in a surface level way. So like, let's say there's loads of volatility in the market and stuff is moving around. Like that's a kind of surface level cause for why you're stressed. But what you really need to work out and look into is the kind of deeper level of why you're stressed.
Right.
Are you stressed because you care about being right? That's a very different reason for being stressed to you care about the capital position of your account. And that's a very different kind of reason to being stressed because you are worried about, like you care deeply about what's coming next, either economically or socially or financially or whatever. And like going 1 to 2 levels deeper, like I think often the reason we feel stress is because we care about a specific outcome. And that care is a good thing. And so you should like lock in to the reason and work out what are the positive aspects of that reason that are driving that stress. And then the third thing that I think is the most critical, but you have to have done the first two to get there, is work out, okay, how can this stress be useful? And because stress is really, really useful for a whole bunch of different situations. And I recommend people go and review some of the stuff that Stanford team has created, because there's a whole bunch of different scenarios where stress is useful. One of the ones that you said earlier was it helps you make decisions quickly.
Yes.
So I think when you are in a state of like low stress, you can spend a lot of time like dithering on decisions and faffing around and trying to get a perfect set of information. And actually stress can be really good to generate decisive action. But that's one of the things that it's designed to do. And those fast, frugal decision-making processes help you make decisions quickly. So that's one good thing you can get out of being stressed. Another good thing you can get out of being stressed is like distilling the like signal from the noise. So being really good at looking at 10 different things and saying, actually, to me, only one of these matters.
Yes.
And using that stress to help you filter through information. It's worth being aware that the way that you filter might be a little bit biased, but ultimately, often there's too much noise, and filtering down a tool is a useful exercise, and stress can be really good for that. The third thing stress can be really good for is forcing you to lock in on the stuff that you think is going to make the biggest impact in the short term. So if you've got 9 positions and they're all swinging about, actually stress might be really helpful to work out, okay, which of those 9 positions do I need to think about immediately as a priority, and what is the action plan to actually do that? And then the final reason stress might be helpful is it actually helps you mobilize and actually think of what are some of the immediate things you need to do, like in like a old caveman style environment.
Or can you leave aside from
Exactly. If you're going to do fight or flight, you need to make that decision really quickly, and that decision will have different trade-offs. If you're doing flight, you might be leaving some stuff behind, and that might be like value that you're losing. If you're going to fight, there might be risk associated with that. And so mobilizing an actual plan rather than just making a decision itself is something that we are much better at when we are stressed. And so just trying to think about, okay, when are we stressed and recognizing what the triggers are for that? Why are we stressed? Like, what's the underlying thing we care about that is associated with this? And then how can we make that stress as useful as possible?
Right. So that's great stuff, because DeepSeek, why I was actually stressed wasn't the fact that it was so chaotic. Why I was stressed was because I couldn't get any more information on DeepSeek that was out, which wasn't very much.
Right.
And meanwhile, markets were just going crazy. And, you know, it's about which positions to watch first. So final word, we only have about 10 seconds to go. So, we have a hard break. So final word for our trader friends out there. If they had to take one thing, remember one thing from you today, what would it be?
Stress is natural, and you can use stress to actually enhance your performance, not just hinder your performance.
There you go. Thank you so much for coming in and telling us that. Lots of people saying thank you here. Very useful indeed. And I'll share that Stanford piece of research as well. We are going to go for this short break, but we will be back right after this.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech, and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, welcome back. We are joined by Smart Portfolio's Aaron Bright.
Hello.
How is it going?
Very well, how are you?
I can tell when you're coming or approaching the studio because everyone's like, oh, gilet, love your gilet. He loves a gilet.
Well, I have to fit the
gilet
finance
man.
stereotype, don't I? So.
And fly the Patagonia. He loves Patagonia as well.
I didn't make it down to Patagonia when I was in Argentina, unfortunately.
I know what happened. There's a Patagonia Express, isn't there?
Yeah, but it's a whole nother experience, you know, hiking, glaciers, all that kind of thing.
Yeah.
I was just there for the sun and beaches.
And the hang gliding.
And the hang gliding, exactly. So it's on the list for a few years' time.
Speaking of hang gliding, I feel like we have hang glided through, crazy headwinds for markets already, and we're only just about past January. Now Trump and Xi apparently have cancelled this call between them. We were talking about this with Issa and Ronnie earlier. What do you make of what has gone on so far? We now in a market caution, sit on your hands until we get further information, or we seem to see Trump follow through on these tariff threats after a brief pause with Mexico and Canada?
Well, I think with Trump, you've always got to be prepared for anything. And, you know, with the tariffs, obviously we saw them reversed, or I wouldn't say reversed, but temporarily delayed, let's just say, in Canada, the Canadian tariffs, and in Mexico, given that he wants to strengthen the borders and stop, I think it's fentanyl trafficking across the borders. That's what he's been very strong about. So I think if Trump wants to, you know,
speaking of which, and drug related here, but we have got all sessions open now. Novo Nordisk up 4%. Sorry, we have to get straight to the head sessions where we're trying to time this very well, but sometimes the clock is against us because we're right up to 9 on Netflix. Up 1.7 as well. Do you want to take us through some of the other big movers?
Yeah, Rivian is also up just around a percentage point. Eli Lilly up 0.6%. Moderna also 0.6%, or just there and thereabouts. And just down that list, we've got sort of flat gains across AT&T, Robinhood, and Coca-Cola.
Yeah, let's have a look at some of.
I feel like a weatherman a little bit.
This is not interesting for the weather. This is how you have positive skew. Alphabet down 7%. This is the C
wow.
sessions. I know Ronnie and I were discussing earlier. Unfairly treated, but that's, you know.
We saw that a little bit with Microsoft, because they had decent earnings, but it was the cloud technology which they were sort of less upbeat about, and then they were punished by that a little bit.
Yeah, but Alphabet as well was really interesting because they did do well.
Yeah, absolutely. You know, I think it's a really strong business case, and I think when you see a company like Alphabet down, you know, almost 7%, you know, is it 7% worse than it was yesterday? Has the business case gone down, or is it a case of just investor psychology and, you know, the likes of earnings and earnings? Exactly.
Massively.
Exactly. I remember the first person who taught me about stocks many moons ago, you know, said it's all about expectations in the short term with the stock market. And if you take a view of sort of Warren Buffett, one of those investors, they just see the stock market and the prices as almost like that's what they can sell it for, rather than the quality of the business itself.
Exactly. Right. Where do you hold the stock until then you need to know when to let go of the bag?
It's that age-old tale of intrinsic value versus market value.
Yeah, totally. And you know, what's also interesting here, and I also learned it from my mentor, is that, you know, the stocks are almost like, it's like going in the dating game. What can you do for me tomorrow? Not what can you do for me now?
Absolutely, yeah.
And if the tomorrow doesn't look good, or it smells a bit iffy, or
it's not just going to magically get better, is it? You know?
Then, you know, you have to make a decision, right? You can't just, you know, hang on forever, just like we know in the dating game.
Absolutely.
So, you know, having a look at some of the others as well, you know, obviously we had, you know, PayPal earnings as well, and PayPal, one of the bigger movers there. Snap also beating Wall Street estimates for quarterly profit. Has to be said that it's a really interesting up day for the Eli Lillys and the Novo Nordisk. Back to Trump and the tariffs. I am also absolutely gobsmacked and interested in the fact that China retaliated.
Yes.
Within the 5 first auspicious days in the Chinese Lunar New Year, because Chinese New Year is 15 days. And the fact that they've done so in the first 5 days is already something in itself.
Definitely. Absolutely.
I bet you officials are very happy to have to be logged on over there and working, you know, to see what the potential retaliation back from the US might be. It's like someone saying that they're going to have you dial in on Christmas lunch.
That would be interesting. Yeah, I don't think that would go down too well with many
Not
people.
going to go down too well. We need to go to a quick sting, but we'll be back for more right after this. So put your questions right on the chat here. Hey, welcome back to Live from the Trade Desk. Just having some really helpful and clever trader friend comments here. Thank you very much, Kieran McKenzie, letting me know my mic isn't audible. They came in and did a quick change, and Aaron Bright here, Ron did a stellar job of, the show must go on, continuing talking as we calmly change the mic. David Boyce, yes, not only did I have chocolate and I have that response. It doesn't happen very often. I don't really like chocolate. We're talking about trading and how to
Calm the nerves.
Calm yourself down. And to also, Issa is really helpful, telling us how to identify when you're in a stress mode. And when I'm really, really stressed, it doesn't happen often, mind you, I eat a whole chocolate Lindt bunny. And to quantify this, I don't even normally eat chocolate. But if I'm really super stressed, I can be seen pounding. I think
See, I find sugar makes me more stressed.
Oh, really? It kind of calms me down.
I have to resort to physical exercise.
To kind of get the endorphins.
Yeah, so I go to the gym a fair bit, but this weekend I'm actually starting kickboxing lessons.
Oh, wow.
Very random, but I just thought, let's do something more fun on the weekend.
Tell us how that goes.
I will, yeah, I will do.
It sounds quite. Is it quite like we have someone kicking you in the face?
Potentially, yeah.
Please don't do that. We need you on the show.
Yeah, well, I might have some wounds which we can discuss. No, I think it's mainly punching bags and stuff. Hopefully.
Yeah.
I'll see.
Do you have any tricks to kind of embrace the stress in a when you're managing your smart portfolio, or is there anything that you look out for that kind of gives you that signal that you need to de-stress?
Well, I think the best way to look at it is you do have to put it into context. Well, firstly, you obviously build an investment or a trade which is within your risk framework, but you put it into context and realize that even if a trade does go sour and it can be very frustrating, it probably won't kill you. So that's kind of the way to look at it. Exactly. Of course it can be very frustrating when we're managing portfolios. The way I would look at it is we look at what the research we've done, and then we look at how we made the conclusions we made previously to build the portfolio. And as long as that there was a lot of robust framework and good ideas which went into it, and there was a clear audit trail of how we made these conclusions, then I don't think there's anything to get too upset about, because hindsight is obviously the most important thing in investing, I guess, and you only get it afterwards. Hindsight
and what happened before is not a guarantee
definitely
of what's going to happen now. However, it gives us a good sort of mirror to what might be ahead. Speaking of what might be ahead, some of the areas, if everyone remembers, that did well. And did have a bounce when Trump won this current presidency, we saw that banks went up, we saw real estate went up, we saw, and these were short-term people, if you remember me saying, do not hold because this is a reaction play. And we saw the infrastructure, particularly related to the building of what they call processing centers, what we call prisons here, but processing centers also rise. But I was looking at, the average return of sectors that did well in Trump 1.0. Do you ever look back at this to kind of decide what you're going to do in the coming few months? Yeah,
we looked at, prior to the election, which political party equities had the best return under, and so a lot of the time it was Democratic, but then you've got to look at the circumstances under the presidency. So it is quite tricky to predict because no one really knows what's going to, unfold in Trump's presidency. Is there going to be
no one knows what's going to unfold tomorrow?
Indeed,
with him around.
Indeed. So, are we going to have a situation of heightened geopolitical stress? Are we going to have one of no geopolitical stress and deregulation, tax cuts, and a growing U.S. economy? Are we going to have one where inflation's going to resurface a little bit? So, it obviously depends on the unique circumstances for how when looking back to how the future returns are going to be.
Taking a look and whacking up the S&P for you, because I really think that he holds the U.S. markets as almost like a proud conviction point if markets, especially stocks, do well in his presidency. U.S. equities, of course, delivered double-digit returns during Trump 1.0. And this is despite the COVID outbreak.
Yeah, we had a 30% sell-off I think March 2020, March. We really strong sell-offs across the Nasdaq, across all global markets, and they ended that year really positively. Despite the sell-off, they still were positive gains for the year.
And leading the returns by quite a margin during Trump 1.0 was technology.
Absolutely, yeah.
So made great strides there. He's now promising this cutting of red tape, right, and
that's
regulation.
Despite obviously Cambridge Analytica scandal, or various things going on regarding that, and still delivering. And
his personal scandals, of which there were many. In terms of smaller companies, 1.0, Trump 1.0. Also tended to do well. I'm just hitting up the US Russell 2000 here for you. There we have it. And this is range bound at the moment. It doesn't seem to be making great strides towards
post-November, we saw a really nice pop and a really nice rise. It's been, as you said, range bound. A little bit of volatility up and down, but nothing to write home about too much.
Yeah, defense companies, just checking on some of the big ones like Northrop, Northrop Grumman, here we are, adding that to the list because I know many viewer friends and trader friends here watch this stock, Andrew McKelvey being one of them. It is doing that, real, let's have this on the daily chart for you. And since October last year, it has come down, but now it has moved higher. And I can almost guarantee that we're seeing the same move as well on BAE Systems.
Yes, BAE Systems had a little bit of volatility as well. There we go.
So moving.
Quite interesting to see how this develops, particularly if we see heightened geopolitical stress.
Rich, I remember teasing me about it, saying that he didn't think this was going to, bode well for the defense sector because Trump was going to be able to, get everyone into a room and then, sort everything out. But I think it's just going to take a long time before, the multiple wars can be solved.
And also a relevant point with Trump is he does pursue peace through strength. So he might have a more peaceful world, but it comes...
More sticks!
Yes. But it's done through more military spending and more sort of, as we've seen with the tariffs, quite a strong arm approach.
Yeah. How about healthcare? What do you think about healthcare? Because that did relatively well during Trump 1.0.
Well, it's interesting. He's got the Secretary of Health and Human Services is obviously RFK Jr. And we know that he's got some quite interesting views on certain healthcare companies. So I think it's going to be really interesting to see the policy he pursues. If you viewed some of his content during his libertarian sort of run for presidency, very against certain food processing and ingredients. I think yellow and red dyes, he was very against that, and critical of some pharmaceutical practices. So we'll have to see if some of that appears in legislation under the...
Why yellow and red dye?
Well, he's claimed that it caused cancer, some of these stuff that's in foods. I watched a video about that during the election. So quite critical on some of the not agricultural, but processed food industries and some healthcare companies. So it'll be interesting to see that approach. And yeah, I think we await legislation and rhetoric in that area, because obviously it has only been a month or so that Trump's been in power.
Yeah, that is absolutely right. And so, past performance is not a guarantee of future performance. We always remind our trader friends here, taking a look at the dollar as well, and cable after that, because we have a Bank of England, set to hopefully, I'm personally hoping, set to surprise markets. But let's just have a look at cable first. We are seeing poor sterling.
A little bit of a recovery actually, last few couple of days.
Just a bit though. I would like to think this is more to do with the fact that lots of stories have come out reiterating that Bank of England is going to do this 25 basis point cut.
I believe so, yeah, because
I firmly believe that out of all the central banks, the Bank of England is the one that has the most sort of leeway to surprise with a bigger cut.
You think so?
Yeah, I mean the UK economy is dire. I'm not even gonna lie. Small businesses and many companies have called out for more help. That whole national insurance.
Yes, real issue. And the problem that a lot of economists have noted with the UK is the risk of a mild form of stagflation.
Yes.
Because the NI hikes will actually act as a sort of inflationary tool, as well as being quite negative for growth, because it obviously increases costs for businesses and takes away money that they can put towards capital expenditure or employment. So you've got the risk of a little bit of stagflation, which is obviously a real nightmare for central banks. Yeah.
Did you hear about Sainsbury's? Them cutting all those jobs and getting rid of their cafes.
Yes, definitely.
I heard on the grapevine that the decision came from we've got to sort out how to pay for this extra NI stuff.
Yeah.
And it's how we're going to do it.
And it will affect small businesses as well, certainly. They'll think, well, how are we going to afford these extra costs? Well, they're going to have to make cuts elsewhere, and not indicative for growth.
Yeah, and at the same time, it comes with a point when the economy is in the dumps. I mean, some have used the word flatlining, but I think it's in the dumps. We have had this happening when we're meant to be on the path to growth now. A lot of people in the city that I was talking to last week, from hedge funds to fund managers to strategists, saying that it's no surprise why Trump didn't hit the UK with any tariffs, because there's nothing.
Yeah, I saw a tweet and it said the US is bound to put tariffs on the UK when it discovers what it actually exports.
Yeah. So it's a dire situation. At the same time, the property market is now really not moving. It's not been moving for quite some time. And
it's an interesting one, because prices are expensive, but they're not going up.
Yeah.
So it's still difficult for first-time buyers, and obviously with the mortgage costs, which is still, if you've got a mortgage now compared to 2020, 2021, obviously you're looking at sort of potentially double, triple the interest payments.
Interestingly enough, I had Matt Arbour on the show the other day, and he was saying it's not just the numbers, but this constant gaslighting of the economy and the whole, the headlines and the everything but potholes to a nation of shoplifters. It's not good vibes surrounding all things economy related. Even the Heathrow runway report, there are now signs of cracks behind that. Ed Miliband still saying he won't say whether or not he backs the Heathrow expansion.
I mean, if he goes against it, he'll probably have to resign from his post as Energy Secretary.
And you always know when something's up, right? When politicians go to, well, we're going to target infrastructure. We're going to target infrastructure, and we're not going to do things that actually really create solid, quick growth for the UK economy. And I'm not seeing the Wimbledon effect. You know about the Wimbledon effect?
No.
So the UK has long been a winner it's been the top dog in the Wimbledon effect. And when you use the Wimbledon effect, it means that you may not win the trophy, but boy, do you put on the best show on earth, right? Everyone wants to come here. Everyone wants to be part of Wimbledon. Same with financial services. You may not have the world's biggest bank, but boy, do you have a financial center that people want to live and work in. Yeah? And you know, do you choose London or do you choose Frankfurt? I mean, there's no choice. This is a very easy decision. And I'm not seeing policies in place that are enhancing this.
I agree. And I think you can see that in the latest poll, political poll, which saw Reform UK become the top party for the first time ever. So you're seeing a real change in political sentiment, which is what, 7 months since Labour got a landslide, second biggest victory since '97.
Yeah.
And I think if we were to have an election today, the result would be just a tad different, to say the least.
What do you guys think, Twitter friends? Away from the numbers, saying the UK tax regime has forced me to throw in the towel as a freelance engineer.
Wow.
IG's gain. That's right, IG's gain. What flavour of engineer were you? I'm interested to hear, because I have a lot of friends in that field, particularly interested in, obviously, structural engineering. Please give me a shout, because I do like structures and investing in them. Away from the numbers, also saying US import section 321. Any item under $800 not currently subject to duty impact on Shein and Temu.
Interesting.
Interesting indeed. Well, if I guess the educated guess here is that if they clamp down, and I'm sure they will, on all those cheap Chinese shopping online giants, then look to the ones that are likely to gain. So like Mercado Libre, looking at that the other day, Mercado Libre brings in a lot of Chinese imports as well, but they also bring in a lot of imports from
maybe Boohoo and ASOS as well could benefit a little bit.
Yeah, and so look to see who is likely to benefit. For Mercado Libre, I believe we have that here on our platform. How much time we got, Cam? The thesis behind this is that because it also sources products from Latin America, I think around 13 to 15% from Latin America, the fact that it can no longer offer Chinese products will mean that it can price at a higher margin, get a higher margin for the products that they offer from Latin America. Any other winners and losers that you're looking out for?
Well, yeah, I mean, if as I said briefly, maybe potentially likes of ASOS, Boohoo, they're particularly cheap in terms of what they sell. And if there's huge tariffs on these Chinese companies or sanctions or anything such as that which stops the flow of these companies, they could also benefit from sort of the clothing aspect of things.
Our gallery yesterday saying as long as trainers and clothing not affected, they're happy.
Yeah.
So the interesting thing too is with all this happening at the moment, what is the current view in terms of where we reallocate? Do you wait and see? Or for the smart portfolios, do you narrow your reallocation trajectory? Do you look at it more often, or do you wait and see? Is it more reactionary?
Well, we're constantly looking at the climate and then making decisions based on that. Obviously, we don't do anything knee-jerk, so we do a lot of research before coming to a conclusion. And yeah, I mean, we still believe in the US exceptionalism argument for sure. We think, the biggest, most liquid market, really strong growth there, good trajectory for US growth, particularly with tax cuts and deregulation, which President Trump's going to bring in. And yeah, I mean, obviously that's our biggest equity position. But we look at things on a quite a big macro level, and we don't do anything knee-jerk. And we also have to have positions across various different areas. We need our portfolios to be diversified. We're not managing just a single geographical equity fund. It needs to be a robust multi-asset portfolio. So we have to have positions in commodities, in property, equities, and also fixed income as well.
So tell us your market assumptions, for example, for fixed income and bonds. You know, do you have like a list of assumptions that, you know, if three are crossed out, then all bets are off? We need to change direction.
For rate cuts, yeah. So obviously we keep an eye on what the inflation figures are, what the economic outlook looks like, and then we position accordingly. We sort of have, you know, I'd say a little bit of duration, not too much. We have some interest rate sensitivity in case of rate cuts, both in the US and in the UK, as well as, you know, benefiting from. We've benefited over the past sort of year or 18 months from really tightening credit spreads. So really benefited from sort of the capital gain in the higher yielding and investment areas of really credit, so corporate debt. So that's been quite a good beneficiary for our portfolios.
Bonds, just whacking up this for you and making it a bit bigger so you can see. You know, yields still holding at that 4.4 mark. Any assumptions when looking at the bond markets?
Well, you know, it's an interesting one with the bond market. It does tend to give us signals for the future, but obviously we saw a very lengthy inverted yield curve, which typically signifies a recession, but we haven't seen that come to fruition yet.
Yeah, we talk about this a lot, don't we? It's almost like the system's broken.
Yes, we've seen a lot of red flags.
Aligned.
So it's a wait and see, I think. So we're keeping our eye on things, and we're obviously noticing that, you know, the short end of the yield curve, you've still got some really good yields there in excess of 4. I think it's 4.2% 2 year. So really strong yields in that end. So we're obviously taking advantage of that, as well as the middle belly of the yield curve as well.
Currency markets have been really interesting too. I tell our trader friends to look and trade the interest rate differentials. Clearly, you know, in the UK, rates are going down, but, you know, keep a close eye to, you know, places like Japan, and we are seeing that also the trade war might have an impact on that, depending on where the trade flows to. Tons of friends in the financial services market in Asia. They're not even you know, so fazed by this trade war business, because for them it's like the Belt and Road and where the future growth lies going forward. Lots of tech stories overnight as well. We've had several questions come through this morning as well. Thank you for those that emailed in. You know, Tech Mag 7 still going to be outperformer in 2025 with Trump around, or actually are we going to see a big correction?
Well, I mean, it's an interesting one. Obviously, tech is really has rallied massively, but if we see increased investment and a better environment, and this US exceptionalism argument hold true, we could definitely see tech be a beneficiary of this sort of world which Trump wants to pursue.
Away from our numbers, it says he was a mechanical engineer, mainly transportation, planes, trains, and automobiles. Right, you're going to help me test EVs. Also, really good space to be in if you trade Rolls-Royce or any of those, you know, the travel sector. Andrew McKelvey saying UK inheritance tax regime is making investment in private businesses unattractive, more tax efficient to gift capital to future generations now, rather than invest and increase IHT liability. I totally agree. I cannot agree more. Because you know, I talk about this quite often. You know, like even like pension funds and trading through pension funds. Now you're kind of slightly put off because that any good work that you any gains that you make, actually you're making it bigger and harder for yourself, because come 2027. You
get a 40% tax.
You get 40% tax bill because that now falls into the IHT basket. The profit per deposit Rolls-Royce isn't in the travel sector. It's loving that. So it's going to be a really, really key few weeks. Just looking ahead to the rest of this week as well. We haven't had any let off in terms of earnings. Just a quick reminder before we go, what else is coming up? Obviously, we've had the big Microsofts, and we've also had the ARMs, and we've heard from Alphabet, AMD. But after the close, sorry, ARM's not out yet. After the close, we'll have ARM. We also have Qualcomm. And then Thursday, we've got Eli Lilly, Roblox, and also on Friday, it quietens down. But before that, we get Amazon.
Big week.
Big week ahead, right? And on that note, thank you very much. Thank you so much for joining us,
Pleasure.
Aaron.
Pleasure.
And we'll have Richie Rich coming up next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. there's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Well, good afternoon, everybody. At least it feels like it, doesn't it, Tom?
Good afternoon, good morning. How are we?
I'm okay. I'm going to have a word about your employee. Ronnie.
Little Ronnie.
Little Swedish Ronnie. I'm standing there this morning. I'm minding my own business. I'm enjoying Angeline's morning show. I'm ironing my shirt. And Angeline's doing Angeline. You know, I like Ferraris. I met Lewis Hamilton, you know, all this kind of stuff. Used to work at Bloomberg. And, you know, so I'm having a good laugh along and checking the chat and everything. And suddenly he just starts abusing me. I mean, do I need to get Pega in here? Is HR on call?
I think HR might be on call at some point with Ronnie, but we'll wait and see on that.
Unfortunately, I'm not an employee, so I don't think it counts. He can say what he wants,
He can. That was his mandate.
But I am a client.
You are. A good one at that.
Oh, Ronnie, but what you forgot, my friend, is that you are not the last one on the show today. So I now have about an hour to get my own back.
Revenge is sweet.
Now, talking about people that used to be on the show, Victoria Scholar just wrote in. Victoria worked here, guys, how many years ago would it have been? About 3 years, obviously went on to bigger and better things, like motherhood. And Victoria's just sent a message in, so I said I would give her a shout out. Fantastic, great news on the baby. I hope you're doing well. And yeah, looking forward to you tuning into the show.
Congratulations, Victoria. Very good news.
Right, Tom, we are going to go on to a look at current market trends in today's market measure. So Sahil prepared this for us earlier in the week, but something took precedence yesterday because, of course, I was short Palantir calls. So I thought we would look at expected moves and how crazy a move up 25% was relative to the expected move, and therefore it'd be worthwhile pointing out how that was calculated. So let's look at current market trends today. Now, as of last week, you saw the S&P was down 1, NASDAQ down 1.4%. So that was for the week ending last Friday and the last week in January, I guess. We saw quite a big outsized move, so 1.6% move on the S&P against what the expected move was 1.6%. The actual move was only 1%. And we saw a big upticks in the VIX, obviously, because of what happened with DeepSeek. There was the IV rank. So IV ranks at last heading up in the majority of indices, especially the euro and also gold, because gold's getting up there, isn't it? We were just chatting about it, Tom.
Yeah, 56%, if that's right. I mean, that's just, it keeps on going, Rich. It is one that's, being honest, not being stopped at the moment. The trend is really going north at the moment on this. 28.70 today it's trading.
28.70 gold, and I'm in this difficult situation where I am long through options. I'm long GLD, and it's gone through the top of my call spread on my March option.
So it's higher than I thought it would have been by March even. And my June options, I've got quite a big lumpy call spread for it to go through 3,000. Last night I was thinking, is it gone too far too soon? So I sold some futures against the option position, but then it's up another % in my face today. So it's tricky when you try and play around against your long-term view.
If you move away from the technicals, what's going to stop it going up and up and up past 3,000? You know, the trend since Christmas has been phenomenal.
Yeah.
The trend in the last 3 weeks has been great. 2870, you know, you'll be looking, as you say, at a 3,000 mark at some point in the near future. But money seems to be flowing towards it.
Yeah.
You know, it's a big play at the moment. It's another day, another record high, keeps on going. Our clients obviously trade it two-way, both long and short. But the technicals would say that it will keep on going for a while as well.
That's right. I think I've got a bet with Ronnie actually that that it gets to 3,000, and he says it won't. So
by what time frame?
June. I think it was June.
Where's he taking you for lunch?
Exactly. He can come along to our lunch.
Correct.
When Lloyd's doesn't get up to 70 pence.
Correct.
Right, now talk about being full of hot air. Let's have a look at natural gas. That's down 6.5%. That was the end of last week. US to CAD, of course, 1.7% gain on Sunday. That's since retreated. But let's look at the worst performers of last week. In that DeepSeek mess, it was Vistra, wasn't it? Down 28%.
Yeah, I was just having a look at that.
What do you think on these power plays? There's my favourite PWR. That was the 5th worst performer, down 18%.
I mean, Vistra's taken such a plummeting recently, down to sort of 168. PWR.
Yeah, my good old Quanta Services. It got up as far as 350, and it was looking great, and then smack down.
Trading below 300 now.
Yeah. But what about the overall question of, does DeepSeek change the demand for energy in the US?
Well, that was the initial thought. That was the mantra. But I would have thought with the power of the US at the moment, pardon the pun, that, you know, we will wait and see. But I don't think it'll be as affected as people think. I think it will, or not be as bad as people think. And I don't think the Chinese have got it all worked out just yet.
Yeah, it doesn't suddenly change those infrastructure projects that are, 10 years.
The amount of capex that's gone into it, the amount of intelligence that is being gone into it, the amount of brain power, work power, people power into it. I can't believe that suddenly something is 90% plus more efficient, 90% plus cheaper, 90% plus a better product, if we look at it that way. So no, I don't think that will outdo what the US have already done.
I heard a great stat the other day. What percentage, so take data centers that already exist and data centers that are in construction in the US. What percentage of the total that are already there do you think are getting built at the moment?
Multiple times.
There's more data centers being built than they exist already.
That doesn't surprise me though, because it's the future, and we're still trying to catch up with that at the moment. They're probably 3 times as many. I don't know the number, but
it's So seeing the stock was high, admittedly, right?
Yep.
So and Constellation Energy as well, but let's see how those turn around. Best performers last week: IBM up 14%, of course, great numbers. Starbucks up 9%, great numbers. CCL, is that Carnival? Carnival Cruises, cruise liners. I missed that completely. They come out with results midday sometimes, don't they?
People are going back to Carnival though. They are going back to the cruises, tourism. You just look at, in the same sector, but look at passenger numbers coming out of the airlines. They're looking for record numbers post-COVID and pre-COVID as well. IBM's an interesting one. I think that's, a strong performing stock post results. I've got to say Starbucks surprised me a little bit.
Right.
One,
the coffee's terrible.
one, the coffee's terrible. Two, their mandate about going back to work, and then also the whole thing about the public lavatories, et cetera, so, you know, we'll wait and see on Starbucks. It's not one that I would be putting away in my pension at the moment.
I think it's such a great chance. I've taken advantage to sell calls because I think you can sell calls in Starbucks all day long.
They had a change of CEO, and a lot of hope and a lot of prayer is going on the new CEO to turn things around. So we'll wait and see.
As far as I've seen yet, he hasn't changed the taste of the coffee. And that is all that
Or the
matters.
price.
Yeah, the price, exactly.
As a price point, it's up there at the top. And I think there's so many other alternatives now.
And you have to
in the mainstream and in the unique. Sorry, say again?
And you have to pay a tip on top.
Correct.
Now, Deckers. Deckers is one down 18%. The Hoka shoes.
Yep.
They've had a really interesting one here because the results were blowout. And it's Uggs and it's Hoka.
Yeah.
Right? Now, Uggs had a huge quarter, but they've run out of inventory. So what they basically said in the guidance is the next quarter is not going to be great, but because of that, it doesn't affect the demand for Uggs. It's not really a product to go to, is it? All the kids you see walking around, you know, down the street, it's all jogging bottoms and Uggs now, isn't it?
Yeah.
I don't think that there's a competitor to Uggs.
And you know, they've got almost a monopoly there, a unique market as well. It's a trendsetter. How were the Hoka numbers? I didn't see those.
Hoka numbers were very good, but the growth is slowing.
Is it?
It's going from 24% growth to double-digit growth.
And it's a tough market, that. You know,
It is
a
one
lot
of
of
the
competition.
shoes, yeah.
It's a tough market there as well.
But then you look at something like the World Cross Country Championships, it was the second most popular shoe worn.
Okay,
You know,
I didn't know that. Okay.
for a relatively new entrant to come and get that was impressive. But yeah, down 18%. I don't know, it was at 34 times earnings. What it does make me think is the worry on Adidas, right? Because Adidas are the same. They've had great numbers. Everybody's got the Spezials, the Sambas.
Yep.
But it's on 34 times earnings. Now, that's what Deckers was before it got smashed. So now I think Deckers, you know, about 27 times earnings. That's generally the right price for these kind of companies. I don't think Adidas should be up.
Adidas has got the longevity. It's got a firmer brand.
Yeah.
It's got potentially more diversity in there as well.
It's had a bit of a super cycle, though.
Yes. Yeah, it has.
Because it had Nike just been shocking. I mean, look at these beauties.
There we are.
New pair yesterday.
Are they off the shelf, are they?
I bought those with my Vodafone losses yesterday. Those are from a skater shop.
Okay.
I must be the oldest bloke in the skater shop to have to been in there in a good while.
Rich, you're 25. Just, you know, you're fine for the
at
time
heart.
being. At heart. I was looking at Decker's share price here. I mean, coming down from what, 222 down to 169.
Yeah. I tried to sell puts in it yesterday, but unfortunately it was only positions to close. So maybe somebody's been hurt in that. Let me just see if I can find that.
Especially if you were short that stock. I mean, you've had a field day, but it's, you know, it was
I don't know if anybody would be
down at these levels in November. So it's really come up from the 170 level over the last 2.5 months.
Yeah, there you go. So we're back, like you say, back to November levels. And it was at all-time highs, you know, so it's tricky. I'm not sure quite what to make of it. But I would sell puts maybe around that 1 150 level. Because if UGG, if they get their inventory back, which they will, right? So it's going to be one bad quarter, and he's told everybody it's going to be one bad quarter. Build up your inventory again. Hawker comes out with a couple of new models, which they are. Then I don't know.
Back to the races.
I think so. At least it recovers the bit that's been puked out. But
Can they make sure they get the inventory back?
That's the thing.
Demand's there. It's just how they build on that inventory and the inventory going forward as well.
Yeah. Long Decker, short Adidas. I am tempted.
Okay.
I'm tempted. Quick look at Adidas to see where that is. Since they reported those numbers, as I say, I think they've been in a little bit of a super cycle. I must admit, the chart looks good though, because that was a breakout on numbers, but it hasn't managed to kick on. Pardon the pun.
I mean, 260 top, maybe a bit above there, come back down. Okay, definitely a bit of support below that.
That's what I'll do. I'll put in an offer there at 260.
Well, it's not breaking 260 at all. It's try to go beyond there 4 times in the last 2 weeks.
There we go. Right. Okay, back to finish off our market measures. Earnings review. So last week, you can see the big moves there. On IBM up 13%, as we said. UPS down 14. That was a kicker. Apple, I see the Chinese are considering putting an investigation into Apple for their competitiveness on the App Store, rightly so. Earnings reviews so far, this was as of Friday, 55% winners, 47% losers, 53, 47, and the average turn flat.
Yeah. It's a 50-50 game there at the moment on the earnings plays.
And on to our section here that we've got 10 minutes to chat on. Tom, what is taking your fancy this week from that list there?
We spoke earlier, Rich. For me today, please keep an eye on Uber aftermarket, Disney, Ford. I think is an interesting one as well, seeing how they're doing. And yeah, it's still some big numbers to come out. Just getting up the.
Let's just have a quick look at that diary again that we've got there. So, Uber. So I actually sold puts in Uber last night, and I bought a call spread in Disney. So I've got a couple of positions there. I got Alphabet completely wrong. And then Lilly, I've got a position on for tomorrow pre-market. That's going to be a big one. And then, still nursing the Palantir position, which we're going to take a look at right now in Trade Expectations. So, which one takes your fancy there? Google, well, let's just have a look at the results or the early indications pre-market from last night's numbers. AMD down 8%, and Alphabet down 7.5%, Apple down 2.5%.
Alphabet disappointed, Rich. You know, I was working yesterday afternoon, yesterday evening, we saw definitely more buyers than sellers coming in there north of 203, 205, 206. It
looked set up. It looked as if the whole world believed that these numbers were going to be absolute smash out.
And I've got to say, I was in that camp as well. I thought it's going to go up, might even get a 5-6% gain above share prices pre-market.
That was the expected
yesterday.
Move.
And, you know, we're in an all sessions period at the moment. Stock opened 50 minutes ago, trading at 191 last traded. So, you know.
Which is only where it was 10 days ago.
Sure, but now we're on the back of these results and what those results mean. Do we see it potentially going back to pre-Christmas levels, which was sort of 175, 180, had a good move up just prior to Christmas and then has continued. But as you know, it's really fallen out of bed last night post the results.
It's a tricky one. It really caught me by surprise. I'm less surprised by AMD because AMD it did actually go up first thing. It went up about 3. I'm short puts there as well, so I'm getting a little bit risky in that I am short puts in AMD. I'm short puts in Nvidia, and also now Uber. So I'm hoping when Uber come out later, they don't get crushed.
What sort of strike level were you on AMD? Where were you?
Oh, not $90.
Okay.
So I've still got a long way to play there. But as was mentioned many a time in the comment section this morning, you lot, enjoying my pain in Palantir. We saw the huge move yesterday, incredible move higher. I am, just to confirm, short the 102 calls, and I blame Sosnoff. Now, I'm on air with Sosnoff later on today, and I blame him because he sold the $100 calls, and I thought, well, it seems like a good trade. The stock will never trade up to 100, surely. I thought, I'll go a little bit higher. So at least if Sosnoff's in pain, I'll be in a little less pain.
105s?
102s.
102s.
And it's trading this morning at exactly 102.70. So let's take a quick look. If we just come off screen, I'll get my account open there. Thank you, guys. Right, get the old margin account on. Yeah, Terence saying, why don't you show your home address as well? Let's have a look at my mess in Palantir. So I did a couple of trades yesterday to add to the complexity of the position. Let's see if we can get that. So as you can see yesterday, I was try and get this for you. Apologies. Can we get there? We go. So yesterday, yeah, I was down $600. I don't think that P&L's right actually. That was a 103.83 close. And I was also short the 65s, which I made $200 on.
Yep.
But I did go ahead and short an 85 put to try and get some of the money back, and a short a 135 call, both for March. So all in all, if Palantir trades at 102.50 on Friday, which is where it's trading at the moment, I get away with it, and I get about $600 back there. And then I sold that that strangle, the 85 135 strangle, for $3.84. Although I went a bit bigger on the puts.
Yeah.
I could end up making money out of it, Tom Roberts.
Got to hold your nerve, Rich. That's the thing. Come Friday, we'll wait and see.
Come Friday, we will wait and see. Or I'll chicken out of it today. If it comes down, it's $4 at the moment. It's priced at. So yeah, it's currently $4. That'll probably come down to $2.50 today. I'll probably just take the lesson and get out for $2.50.
Take the pain and move on.
I'll see. We'll see what Sosnoff does.
Two for our viewers just to keep an eye on. Tomorrow, please keep an eye aftermarket on Amazon. I think just with what Amazon is, the company, with how they're trying to get back into bed with America, with the new president, just keep an eye. It's had a very good run since sort of, I'd say, end of November when it was down at 195.
Yeah.
Trading 238 now. Be really interested to see what those numbers are like coming off the back of that decent run on Amazon. And secondly, if I'm not mistaken, after hours tonight, I think the calls at 10 o'clock is MicroStrategy, MSTR.
Ooh, with the biggie.
So do keep an eye on that. Gives obviously a flavour on where people are with crypto, Bitcoin, and just the whole MicroStrategy environment at the moment. I think that call will be very important at 10 o'clock. Wait and see.
Good. Right, Tom Roberts, thank you very much. We have a special treat coming up after the break. In 3 minutes' time, we've got Michael Taylor of Shifting Shares, the Finfluencer of the Year 2024, beat me to the post. And now coming in to rub my face in it, we'll be talking everything UK, small caps, mid caps, and the general outlook after this break. Join us then. Thank you, Tom Roberts.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the Close button next to the relevant trade.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction, regular platform feature highlights, and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
That's right, a new section of the show, Mid-Cap Focus, and that's because we've got Michael Taylor in the building. Good morning, sir.
Good morning. Yeah, thanks for having me on.
My absolute pleasure. So, yeah, just introduce yourself to those who don't know about shifting shares.
So, for anyone who doesn't know me, I am a professional trader with IG, and I've been doing that for 9 years now. Yeah, since 2015. Yeah, 2015 was a down year. Because I bought some, it was called Pia TV, and it was complete garbage.
TV News or something, is it?
It was, so it was an Israeli over-the-top TV box company, which was just complete trash. And then that sent me down the rabbit hole of wanting to make that money back and trying to work out how to do it. Because the volatility on it was insane. So I thought, you know, people are making money out of this. I just need to know why.
Yeah,
and so it was like curiosity, if anything.
Do you know, my story was quite similar getting into it. Is a stock called Minor Planet Systems.
Right.
And I had no idea about the dot-com boom that was going on in the US, right? I just liked this mid-cap thing, and it was GPS in trucks. And suddenly, out of nowhere, the company hadn't even made an announcement, and the thing was down 30%. Oh. And it was the dot-com boom exploding.
Okay, right, yeah.
So, but I was the same. I just thought, right, how do I get into this and learn more about the way these stocks and what they react on?
Yeah, well, that's it. They move on different things, right? Because I remember early in my trading career, the EasyJet put out record profits. I thought, oh great, I'll just buy this stock and I'll make money.
Yeah.
And then it went down, and I thought, licked my wounds and got out. And I was like, well, obviously that doesn't work. So
It's
you just got to
much
completely
like
learn.
Google yesterday, right? Google, great numbers last night, and then the stock's down 8% today. So learning about expectations and where the street sits.
Yeah.
Is
that's it. It's a big thing, because trading, you can look at the charts, you can learn what the company does, but often it's what is priced in and what isn't. And probably the best example of this was Boohoo in 2017. So I had a broker. He's a good broker. I still work with him now. He called me and he said, do you want to go long Boohoo, because we've got results coming up.
Yeah.
They're probably going to be good. And I was thinking, if he's calling me, he's probably called however many of his clients.
Nice.
And also, Boohoo was going into the stratosphere at that time.
Yeah.
It was always ahead. And it was like, well, if it's ahead again, is it really in ahead? And it put out really good numbers ahead of what the market wanted.
Okay.
But the reality, it was just so high, and it was down 30% in a day. And that was actually
down
the peak.
30.
Yeah.
Were you short?
I wasn't short,
Okay,
no,
but
sadly.
you weren't long.
I wasn't long.
Yeah.
But yeah, that's it. What is a company can appear to be doing well, but if everyone expects it to be doing better, then it's just going to end up down.
That's it.
Um,
And so tell us about what kind of world you look at, market cap size, and is it solo UK?
UK only. I don't do any US or crypto or options or anything. Maybe you can teach me about that in the future. But UK, sort of small to mid caps, 500 mil and under. I tend not to look above that, but I will trade something. So I've got a position in Burberry now.
Which you've had a great call on.
Well, I don't get them all right, believe me. But that one is doing well so far. I think there's more to come, but I could always be wrong, as I often am. But I'll trade anything. Don't sort of discriminate, but my sweet spot is 500 mil and below, probably even 250 and below, before you've got institutions coming in. So the market below 250 is quite inefficient.
Right.
So if you can spot a company that is performing well, and it's entering that sweet spot of the chart, plus you've got earnings upgrades coming, and what you find is brokers will often underrate it, because if you think about it, they're getting paid by the company, right?
Yeah.
There's no reason for them to go and knock it out of the park and say this company's going to do fantastic, because they just want to be in line with what everyone else is saying for consensus. So if they're wrong, everyone was wrong.
Okay.
And plus, if the company performs better than what they said, they can say, oh, well, I was right. It did even better than what I thought.
Right.
So if you can catch a company at the start of an upgrade cycle, especially after it's been completely hammered, you can make decent returns doing that.
Spot exact, and that's even in the large caps the same thing, right?
Yeah.
If you spot the start
that was the reason for Burberry.
Right. When they came out and they said, oh, we're the silly bid rumor.
Yeah.
That took the stock up, then it calmed down, but then they actually came out with a strategy, didn't they?
Yeah, well, also the numbers were just way better than what was expected. So the quarter-on-quarter comps, they were still negative, but it was a lot better than what was expected.
Yeah.
Hence the 20% uplift in the price, which is big for a company like Burberry.
It really is. And you still got it? Still got Burberry?
I've still got it, yeah. I'm probably going to add to it as well.
How many positions roughly would you say that you have on at any one time?
I don't want more than 15. Because once you start going over 15, you can't remember them all. It takes time. You've got to know the story on them. Sometimes it might just be an intraday thing where I don't actually care about the business. It can be garbage. Doesn't really matter if it's going to move. It's going to move. That's all that matters.
Yeah.
But I'm typically not holding those positions for that long.
Okay.
It might just be a few days, and I'm out. So the sort of longer term trades, the trades to hold as I call them, will be quite well researched, and I'll be holding for anything from 3 to 9 months ideally.
Okay. The way that I like to look at it, and sort of have done for about 10 years, is a chessboard.
Yeah.
And your small trading positions, not very high conviction, are all your pawns. And then obviously the more important, the chess piece, the bigger position you might have, or the higher conviction you've got, you know, and then there's your king and queen.
Yeah.
So have about 10 conviction ideas, and then anywhere from 5 to 10 smaller.
Yeah, I think that makes sense. Because if you think about it, you want your P&L to either be flat or high.
Yeah.
And you know, if you take lots of small losses, you are ideally not going to be negative, or if you are negative, you're not negative down, because then you can decrease your position size. But the ones where you were right, you want to be big right.
Yeah.
And that's what drives your P&L. So you can do well, you know, intraday trading and, you know, sort of scalping. I mean, you can do very well on that. I can't, because I'm not that good. But certainly where I make most of my money is the sort of longer term stuff.
And the spreads are slightly higher, slightly bigger on those sizes.
Oh yeah, absolutely. You got to be, if you're going to buy something, you got to be sure, because you can't just sell and take a small loss. You know, it's not like Burberry where, you know, the spread is tiny.
Now, one stock I know that might be a little bit big compared to what you look at is Vodafone, but we haven't really spoken about this morning, so I've got to get it in there.
Right.
And it's up 1.8 this morning, and the reason that it's up this morning, I think, let's just take a look at how much it was down yesterday. If you look at the news headlines this morning, you go to transaction-owned shares. Look at what Goldman's did yesterday, 28 million shares. That is the highest number of shares that has ever been bought back in Vodafone in a single day, ever. The average is about between 10 and 12. A big day is 14. They went in there yesterday and they saw it down there, down 8% at one point, and they absolutely scooped them up. So if you're wondering why Vodafone is recovering today up 1.7%, that is because the company is not effing around with the buyback. So yeah, that's one to look at there. We also chat regularly on JD Sports. Don't we? It's quite an interesting one, and it maybe we talk a bit about Nike as well on the back of that. What's your view on JD and that sort of thing?
Can you load the chart up on JD,
I certainly
please?
can. So there you'll see it. Would you like a daily?
Daily candles, yeah. But I mean, like, if I look at that, it's not hugely insightful, but that to me looks like a downtrend.
Yeah.
So I'll just avoid it.
Yeah.
Because I'm not BlackRock. You know, if you're BlackRock and you need liquidity, you're probably going to be buying now for a 3 to 5 turnaround.
3 to 5 year.
Yeah. Well, or however many years it might turn around. But I, you know, don't need. I can just wait for the stock to turn up and then start buying.
Yeah, because it's got a long way to go if it does turn up, doesn't it?
Yeah, well, that's it. People were making fun of me when I said I would just avoid it on the last profit warning, and you know, we had another profit warning the other week, and now it's printing nearly multi-year lows.
Because that was, I remember that you were saying to avoid them at 90 pence.
Now I think it was.
Oh, this one.
No, sorry, that's 2010 now. So these aren't daily candles, are they?
What were we on the daily? Yeah, they're just very far out, that's all.
I think there was a profit warning in November.
Let's see where we
are. That's in 2012 there, so...
oh no, I think that's...
is it something else?
Let's see where that was. That is 22nd of November. Yeah. So yeah, above 100 pence.
Yeah, I mean, I didn't short it because I thought it's already downtrending, therefore people are expecting a warning.
Yeah.
But it turns out
it was even worse.
Yeah.
Yeah. And so then I guess, you know, look, Nike obviously is not one that you look at, but you were very, very aware of, you know, that kind of story and the effect it has on JD Sports and stuff. That's an interesting turnaround story for me, because Elliot Hill, he's come in. He's aligning the stars, so to say, with his management team. You know, he'll get rid of some managers, he'll keep it. You know, like a lot of businesses do when they go through restructuring. When it comes down to actually looking into a stock properly, how much are you researching? How much are you diving in the management team and everything?
Well, that's it with Nike. There is no way I'm going to have an edge on that.
Yeah.
First of all, I'm not smart enough. Second of all, I don't have the right access. I can't really get any, anything that's in the public eye is being quantified by, computers with bigger brains, teams that have more money, and organisations that are far bigger than me in the, spare bedroom, tapping away on the keyboard. So for me, it'll be smaller companies. I'm looking at the financials. Does it need to raise money? If it does, how much cash has it got left? And then, I might even short it and then cover it in the placing.
And you took yourself to uni to look into.
So I did history and then didn't really know what I wanted to do afterwards. So I thought I'll do a business masters and make a lot of money. Because then, when I know what I want to do, at least I might have some money to do it. So I did that. Didn't really work out. I did a spell at Vodafone.
You did indeed, I remember.
That HQ in Dusseldorf. Very nice. Yeah, it's a very nice office.
Very expensive, clearly.
I'm sure it was. Yeah. Great people. Absolutely couldn't fault it for that. But the work for me, I just didn't enjoy it.
Yeah.
Everyone likes different things. I remember the first day actually of that. I think I nearly had a panic attack. Because I'd gone in the first day and walking out, I thought, this is potentially what the rest of my life could look like.
I had the same panic attack in the tube at 8:50 a.m. this morning in rush hour.
Oh no.
That's not a nice experience. The district line.
Right.
Like this. With people just growling at me because I've got a backpack.
Oh no. And I guess you have to put the backpack to the train as well, so no one can go in and steal it, right?
Well, yeah, I didn't even think of that.
Yeah, no, you got to be careful now, sadly.
Yeah.
But yeah, did a stint at Vodafone, and then got a job in recruitment. So I worked in Germany for about a year. That was 6 months, and I was doing the shares on the side. And then I took a bank loan from Deutsche Bank and started trading shares.
Wow.
So, which I absolutely would not advise. I will say that now. Do not take a bank loan to trade shares. So for anyone watching, don't do that.
That's clear.
That's, not a good idea. I mean, it worked for me and I accepted the risks, but it's not obviously I can't advise anyone to do that.
Yeah, it was a well thought out discussion
that's
with
it.
your wife and everything, wasn't it?
Yeah, I mean, I could always go back to recruitment or anything else. It was entry level. Yeah.
And very the opposite of YOLO into
Yeah. I mean, I was quite lucky because 2016 was like a crazy bull market. So because I was no good, I still made money.
Yeah.
And then 2017 was also good, but 2018 was where things started to fall apart, and I had to learn what worked and what didn't, and become a bit more systematic. And you start reading things and pulling pieces of what works. And I was reading books on value investing, and I thought, well, it's not for me. But yeah, it's a constant learning process. But yeah, look at the financials, look at what the company does. Is there a tailwind in the market?
Yeah.
So for example, one company I've got now called Filtronic, I've got a long position in it. And that provides special technology that goes in LEO satellites, so low Earth orbiting satellites.
Okay.
And it provides a piece of kit that nobody can reproduce. So SpaceX are working with them. And they don't have exclusivity. They can sell to other companies. And I'm not suggesting anyone buys this.
It's certainly had a good run.
Yeah, it's had a good run, and hopefully more to come.
So last year went from 20 pence up to 75, and now at 95.
Yeah. So I've been in from, I think, that gap up.
Wow.
So I remember I'd landed in Dubai and I thought, there's an hour, so I'll check the news.
Yeah.
I'll stay up. And thankfully I did. I got in and I've added to it since.
And what was it? How much work will you do, and where do you first hear about the company?
So RNSs, you can hear about them every day. The LSE publishes a long list of price-sensitive information. So you got your results and everything. That's a good start. You can learn about a company through initiation notes. I mean, the ones I get are all paid for by the company, so they're not independent. It's marketing material.
Okay.
But it can help you learn about the company a bit faster.
Yeah. Where does somebody sign up for that sort of stuff?
So there's a company called Research Tree. I think it's £25 a month, and that basically amalgamates all the free stuff. And then if you really want to get expensive, you can go to Peel Hunt and get on the starter package for like 10 grand a year, which I don't subscribe to.
Okay.
Yet, maybe in the future.
There we go. That's quite a nice website as well. It's the first time I've heard of that. Actually.
Yeah, no, it's quite good. So all of the the free stuff, it's put in one place, and if you just type in a company, it'll bring up all the latest stuff. So you can see what the forecasts were if you go to the initiation. Let's see what comes up.
Oh wow!
Click research. Nice. I'm not sure if it will show anything. No, it's locked. But if you go directly onto Cavendish's website, you can probably get it for free.
Okay.
But I sign up to this. It's pretty good.
Yeah, it's nice. There's a lot of resource out there for even the smaller companies.
And Investimate company as well. So they do.
Oh, that's great.
Yeah, exactly, and that's free. So what I do on that is wait for the call. Unless I urgently want to see the call, I just wait for it to go on YouTube and put it on 2x. And then I can watch it really quickly, and you can also put the subtitles on.
Right, that's what a lot of people, probably how they listen to me as well, on 2x.
Do you reckon?
Good stuff. So we've got another 10 minutes. We're just going to take a quick 1-minute break, and drop your questions into the chat on YouTube. What questions do you have for Michael? I know Andrew McKelvey will have one. Monkey Man, let us know if you want to drop a couple of questions as well. We'll be back in 1 short minute and continue with Michael Taylor from Shifting Shares.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction. Whether prices are rising, falling, or staying flat, there's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
We're just laughing at the story in Diageo yesterday. So obviously they stepped away from guidance. They're the first company to actually put out a warning on tariffs that don't exist.
Yeah.
It was like, okay, so it might cost you 200 million if you believe Trump and is always bullying. But the great thing to come out of the conference call was that the new CFO has never even tried a Guinness.
Okay.
I mean, surely it's in your job interview.
You would imagine so. That even the CFO should know the product. Yeah.
Split the G and you've got the job.
Yeah. Yeah, that's quite odd. Surprising. Doesn't really inspire confidence, does it?
No, not at all. Right, Ferexpo is one that we both look at. That's where our kind of worlds meet. But thankfully, neither of us got a position in it.
Yeah. So this obviously started rallying because of Trump and the goal to end the war. So, you know, if there's any sort of piece, well, depending on what terms, you know, those are on, could potentially be good for Ferrexpo. But yesterday they had a court case and it sent the stock down, was it 50% at one point? Did it get to 50p?
Really painful. There we go.
Fall as much as 17% to 66.3. Okay.
So
that's at 8:30 yesterday, so that's not.
That was early.
Yeah.
Civil claim was filed on Tuesday against Poltava Mining in relation to alleged illegal mining. Company said it intends to vigorously defend its position. Yeah, so tricky one there for Expo, but it is one that we've covered in the past because Andrew McKelvey put us onto it. Now, speaking of the devil, he's the first one with a question. Do you manage to arbitrage between exchanges, and if so, how? For example, OMI in Canada was 20% above London yesterday.
I don't do that. I'm not clever enough, so I'll leave that to people like Andrew.
Andrew's all over it.
I mean, there's sometimes with rights issues you can do things like that.
Of
with
course.
a theoretical X rights price, because a lot of people don't understand that, but that is a professional level trade. I mean, even I barely understand it, so I can't remember which one it was, but there has been money to be made on those just because people don't understand them.
When a company comes out with a really complex rights issue, it's like, here we go.
Because a lot of people look at the rights issue and think that's where the price is going to go, but it's absolutely not.
The whole country of New Zealand got it wrong in Air New Zealand.
Right, okay.
And the way that they did it, it was quite complex. And that's actually how I got into social media.
Right, okay.
Because I was like, I have to warn the people of New Zealand, stop buying this thing at 100p, because the fully diluted was down at like
so Turk was like 70 or something.
No, the Turk 78 I think. But the nil paids were going to be, I don't know, 40 cents or something.
Right.
But the stock was trading at 100 because people thought that I can't remember exactly. So that's why I actually made my first Instagram video.
Right,
was
okay,
explaining what a rights issue
I'm going to have to look at that,
Yeah.
I've never seen that one before.
The good old days.
Yeah.
Now, that is how we met, first of all, about a year ago.
It is on TikTok, wasn't it? Yeah.
The strangest place. I never thought I would meet a friend on TikTok, I have to say. But yeah, the two of us, exchanged a few messages, a few ideas, and then met up for a beer.
Yeah.
And discussed the world of social media. So, as I mentioned, it's Michael's is at shifting shares on pretty much
pretty much everything. Yeah. I mean, if you follow me on TikTok, you'll get another 200 people following you. And if someone who looks like me messages you, it's not me. I guess the same for you, right? You've got so many clones and stuff.
I think it's about 54 fake rich macro trades. And that's it. So yeah, if you ever get a message from anybody on social media, ignore it. It's not them. It's a fake account.
Good advice,
from Nigeria. How did your path into social media? How has that developed? Because you're blowing up now.
It's going quite well. Yeah, I'm pleasantly surprised by it all. It's also quite exciting, right?
Yeah, absolutely.
Because you get messages from people and saying, "Oh, I watched this video," and I did a video on life insurance before, and someone said, "Oh, this, I earn quite a lot of money, but actually I'm the only provider, and I never even thought about this." So,
brilliant.
They took out a policy. Yeah, I mean, I think everyone should have some form of protection. I mean, I've got insurance up to the eyeballs, and the way I see it is, hopefully, it's the biggest waste of money ever.
Yeah.
But if something happens, then at least people don't have to worry about money if they've got the right cover in place.
I hope you've got mobile phone insurance, because anybody who hasn't seen Michael's videos, it's him walking along a street holding the phone up.
That's why I don't film in London. So
very wise.
Too scared.
Right, question number 2. Do you keep a journal of trades? Also, at what point do you decide to sell?
So I do keep a journal of trades, and to anyone who does trade, that is an absolute must. Because if you were not doing that, you were just missing out on free money.
And the lessons.
Yeah, and the lessons. Yeah, I mean, there's a lesson behind everything, and you want to be able to look at something and think, why did I do that? But also, what happens after the trade? Because if you find out that you're selling And then 4 weeks later, 90% of the time the stock's continued, and it's only pulled back like 10%. That's free money. You can then do something about that. But if you don't log them, you'll never know that.
That's it.
So absolutely, a journal is a must. Like if you're going to trade, treat it as a business. Do it seriously, because most people lose, as we know, right? I mean, it's on IG's website. So
there's putting in discipline and risk management. And do you use the alert function and things like that on IG?
I do not know. So I use everything on ShareScope.
Right.
So I'll get emails, and because I leave it running, I'll get alerts on that as well.
Right.
But yeah, alerts really, I mean, you can outsource quite a lot of things. So if you look at a stock and say, right, I might be interested in this at 80p, but it's currently 50p, you don't want to track it every day.
No.
You just put an alert, it gets to 70p, then it brings it to the, the focus, and then you think,
isn't it?
Has the story changed? Am I still interested? If so, set an alert at 75p, and where it's getting quite serious.
Yeah.
So yeah, you want to outsource as much as possible.
Fantastic. And yeah, at what point and what causes you to decide to sell?
Well, if it's a profit warning, it's an instant sell.
Right.
I just liquefy at whatever price. So profit warning, if it breaks trend or hits my stop loss, I'm out. I don't need to be a hero and ride everything down.
So you have strict stop losses?
Yeah.
Yeah.
You've got to. And if you don't have a stop loss, you can't scale.
Yeah.
And if you can't scale, there's no point.
Yeah.
So
absolutely. So capital preservation.
Capital management. Yeah. I mean, that's why most people go bust, right? Either big volatility because of too big a position size, or like no stop loss.
Yeah.
I mean, one person messaged me, hadn't made any money in like the last 10 years. Biggest bull market of all time, he's made no money. And I said, no, send me your trades across, because I thought, I'm genuinely interested to see what the issue was.
Yeah.
Loads of 90% downs.
No, so it wiped out all the gains.
Yeah, so, even if he was profitable, the 90% things that he just couldn't admit he was wrong on were just costing him money.
Yeah.
And it's the same for everyone. Every losing trader, it's always big losses.
Yeah. Yeah, or even one big loss. Right, final question before you go and jump back in the bus. Any thoughts on National Express, Mobico?
No. If we load up the chart, let's take a look. I think this did have good news recently, though, didn't it? If I recall.
Oof, doesn't look like it on the chart.
I think it was a few weeks ago.
Yeah.
Yeah. So it looks pretty trendless. I would just move on, because there's like 2,000 stocks in the UK. You don't need to be spending time on.
How many there is?
Well, it's decreasing all the time, isn't it?
Yeah.
But, which is a separate topic. I'm sure we could talk loads on.
Yeah, bids.
Bids and nobody listing. So
okay.
Yeah. But yeah, I would avoid that. I'll just move on to another chart.
Excellent. Feel free to give a shout out to anybody before we go.
Well, follow you for a start. That's always a good one. Thanks everyone for taking the time out of your busy day to watch us natter on. Really appreciate it, and thanks again.
Good stuff. We look forward to seeing you again.
Yeah, likewise. Thank you.
Cheers. Thanks everybody. We'll see you tomorrow, bright and sharp. I'm back in at 7:30.
Yeah. Google earnings are out. They're not good, but it was a good day for the markets overall. It is Tuesday, February 4th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Dylan Radigan in Milan, Ilya Spivak in San Francisco to take you through the rest of this hour. An hour that's going to be defined by a number of earnings releases. Google's out here. We have AMD, Amgen, CMG, Mondelez, SPG, Prudential, Disney, Uber, Snap. Plus, tariffs are on, with China at least. If you're trading these markets today, tell us what you think in the chat on YouTube. If you're already on YouTube, come over to tastylive.com or the platform to see what we're all about. Gentlemen, the markets are broadly higher here, even after Google's slightly disappointing earnings. If you weren't here at the end of last call, we can reiterate some of those numbers here. Google earnings 213 was the expectation. EPS comes in at 215. Revenues are 96.47 billion. That's against the expected of 96.56 billion, so a little bit of a miss. The share price now on a 192.80 here when we close in at 206. It was about a $12 expected move in either direction, so we're essentially pressing right up against that, a little bit weaker. Overall, though, it doesn't seem to be denting this market. NASDAQ's still on pace to finish up the day by 1.03%. The S&P higher by 0.56. Dylan, you were cheekily asking Ilya in the green room, what will it take for him to turn and become a bull? I suppose there's an innuendo there. You're looking at the markets and saying, what could go wrong? We're weathering all these punches. We should be going higher.
No, for sure. I mean, there's a world where you look at, I'll call them disappointing or unexpected events as defeats. And there's a world where you look at unexpected or disappointing events as setbacks, even as opportunities. And for me, I looked at the events of the weekend as a defeat. I thought to myself, my goodness, what has happened to America that the American president would alienate our closest allies, even if it's short-lived, in a way that is a betrayal of a fundamental trust. But someone of perhaps a younger generation like yourself, Mr. Vecchio, not to insult Mr. Spivak's age, is to suggest that at a younger age, you would look at the decline in asset prices, whether it's in the S&P or in crypto for that matter, as an opportunity. And I think that that's sort of a distinctly distinguishing characteristic within the market as to whether you look at some of this information as a defeat or as a deterrent to be a participant, or whether you look at some of this information, I'm speaking specifically to the Trump tariff threats, as an opportunity or as a liability. And I think that it's an interesting moment to review sort of the generational component, where some generations look at, some of my closest friends are, a decade younger, 15 years younger, whatever, and they look at these things as generational, as opportunity. They say, listen, it's cheaper, buy it, it'll go up. I look at it and I think, my goodness me, we've alienated Canada, we're alienating Mexico. They've lost their minds. It's really a question of how long the market will even indulge the perceived setbacks of American policy, and at which point American policy loses all credibility insofar as it's perceived as only a theatrical moment for a president and something that shall never be seen with follow-through, which then results in no price action. And right now, there's still price action because you have a new president and you have new threats. But for sure, obviously, it's a validation for your generation, Chris, which is if it gets sold off, buy it, don't ask questions.
Well, I think that the generational attitude is, I think, been ingrained, not from the price action, but from like the education that people my age and younger have received about how markets perform, which is to say that if you're not retiring tomorrow, then you really shouldn't be concerned with what's going on in the stock market on a day-to-day basis. And if there are pullbacks and you're going to have this money until you retire, use it as an opportunity to buy in, right? So long-term investing and proper retirement planning, if you will, as that's made its way through financial education, I think has given people in their 30s and 40s, confidence. I'm not retiring in the next 10, 15, 20 years. And we also heard the stories of what happened in 2008, Dylan. The people that sold out and panic sold, and unfortunately those that couldn't ride it out because they needed the liquidity, they then lost their asset base to grow into the future, whereas the people who could withstand the drawdown and hold on to their stocks throughout all of it and maybe add in and dollar cost average in slowly over time, 2008 is a bump in the road. It didn't derail their long-term retirement planning. So, I mean, it's about a longer-term view, but as traders, that's certainly not the conversation here. Traders were thinking about what happens today, tomorrow, and I think something happened today that was pretty important, or rather, what didn't happen today Trump was speaking this afternoon about myriad issues going on in his administration, if it's from deporting people to El Salvador because we don't have room in our prisons, to potential Bitcoin strategic reserve. David Sachs was on the air. While Trump was speaking, volatility didn't do anything. Nothing. Ilya, is this boy who cried wolf personified already?
I think that's too early to tell, and I think the quintessential strategic direction of the Trump administration is to be surprising at all times. And so it's not, I think, anything that we can take as given. Now, to Dylan's generational perspective point, I think what you just said, Chris, is very, very important. There is a fundamental difference between having a generational perspective on investing and the long-term prospects of the stock market. On that part of the story, I am exceedingly bullish and have remained thus for 2 decades for much the same reasons as you describe. And indeed, one has been rewarded for being buy and hold bullish on U.S. stocks for not just sort of the elder millennial and onward generation, but for much, much, much longer. But as traders, that is not a relevant perspective. For traders operating in shorter time frames, being of permanently bullish or bearish mindset is a liability. One needs to not be committed one way or another. Strong convictions loosely held, as it were. And this, I think, directly applies to what we're watching here in the aftermath of this tariff U-turn, as it were, at least for the meat of what's happened over the weekend, and what kind of credence we give to the pronouncements of the administration going forward. And obviously, one of the major questions following November's election result was, to what extent are the tariffs a threat and an inducement and a negotiating tactic versus a goal unto themselves? And I think what we learned over the past, let's call it 48 hours, is they are a threat and an inducement more likely than they are a goal unto themselves. And so the inflationary threat that the markets were, let's call it from mid-September through mid-December, thoroughly baking into bonds, into yields, into the dollar, at least to some extent, that has room to be relieved. And not surprisingly, what do we see today? One of the few kind of places where you get a relatively steady assessment of what's going on is the bond market, and bonds are higher as a consequence of this. All to seemingly suggest, okay, maybe some element of reflationary intent has been diluted. But
stop right there. What does that mean to say all elements of reflationary intent?
Some elements.
That's sort of some verbal complexity that confuses me, with all due respect.
Well, let's break down why the markets thought that reflation was coming from mid-September. Is it just the tariffs? Obviously not. Chris, your audio's gone.
Sorry, but using like fifth grade words.
Well, yeah.
For me and Dylan's sake.
When we started...
That's what this meant.
Yeah, when we started to reflate in expectations, and the market said there is no way the Fed is doing 4 cuts in 2025, it's just not going to happen. These expectations are way out of whack. Send yields up, send the dollar up. There's no way all this is going down. Some part of that were the tariffs. They weren't all of it, because obviously before the election even occurred, you already started to have this. And some of it was the other elements of the Trump platform. Some of it didn't have anything to do with the Trump platform at all, and more so looked at the U.S. economy starting to reheat from late August and saying, election this, election that, what does it matter? The economy is hotter. You're not going to do all these cuts. So the reflation as impetus had many elements, of which the tariffs were one. Because obviously when you increase the price of imported stuff, you increase the price of imported stuff. That's inflation. So when
Ilya,
you...
sorry to interrupt you. The Snapchat earnings are out here. I know some people are interested in them. Snapchat shares are up here now, 1273. I'll pull this down to a 5-minute chart there. In terms of those earnings, we're looking at 16 cents versus 14 cents expected, 1.56 billion on revs versus 1.55 billion expected. These metrics matter for companies like this. Daily active users, 453 versus 451.1 million expected. Global average revenue count per user in line at 344 expected. So that's a 14% increase in revenue. That is ultimately good for a nice little pop here, Dylan. Snapchat was often seen as kind of like a bellwether for the rest of the tech sector, given the fact that it kind of sits at the front edge of the spending curve for advertising dollars in social media. NASDAQ recovering a little bit back here. We're not quite to where we were prior to the Google earnings, but about 40 points lower, 10 or 15 off the lows here. Anyway, Ilya, sorry to interrupt you. Wanted to share what was happening with Snap.
Well, what are you getting at? Are you saying this is good for technology or bad?
Well, Snap is kind of like a bird in the coal mine. So if Snap's doing well, then probably good for social media companies. But then again, Snap is no longer reporting at the front of the parade for the tech companies, right? It's now somewhere in the middle, in the back end.
And they're also not the kind of
in the
name
past,
that
it was a leading edge indicator, but now it ain't what it used to be.
Oh yeah, I think.
Well, it's not exactly the dominant name in the narrative anymore either.
Clearly.
No. But before, because it would come out earlier in the earnings cycle, you would see NASDAQ futures move a lot on it because people would imply things about spend in like Meta, for example.
As a bellwether kind of thing.
Yeah. And when Twitter was public, that was a whole thing with Twitter stock. Ilya, can you go back to what you were saying about the...
Sure.
Yeah.
Sure. So the upshot is that some element of the reflation is probably wrong if the tariffs are not in earnest real. That is to say, if you can get away
or not, with all due respect.
Which they clearly, well, what we've learned, again, I would say in the past 48 hours, is that the tariffs are a threat, not a goal unto themselves.
Not a reality.
Not something that we're going to do no matter what. Not like, oh, this is just good policy and we should do it. No, it's more like you better do this other thing or there'll be tariffs.
Or maybe you can just agree to do the thing you were already doing, but just do it more loudly, and then there won't be tariffs.
And do it in response to some kind of posturing such that there is the appearance of a backing down.
Theatrical event.
Dylan, can you please expand upon that? Because there's like a meme that goes
some
around.
of the commitments from Mexico or some of the commitments from Canada are commitments that existed prior to the tariffs.
Yeah.
And that the phone calls to make the tariffs go away were simply affirmations or commitments to continue to do the very things that have already been agreed to do by Canada or Mexico, but done in such a way that it is egotistically gratifying to the president. So if in fact I said to you, Chris, no matter what, you must wear your glasses when we do overtime, but you're already wearing your glasses when we do overtime. But I said, I will tariff you if you do not continue to wear your glasses when we do overtime. And then you said, okay, Dylan, I shall continue to wear my glasses when we do overtime. And then I say, look at how powerful I am. I have convinced Chris to wear his glasses, even though Chris has been wearing his glasses for months. That would be sort of a version of the Trump administration theatrics.
Well, and so then look.
Thank you.
I think Dylan makes the point perfectly. So then look, the tariffs are theatrics. A part of those theatrics being baked into the bond market must then be discounted because clearly a part of the inflationary drive higher isn't actually there, isn't real, was not going to materialize. Okay, bonds are up. Makes sense. Dollar is doing a separate thing after a weird weekly open. Let's discount that. Let's be generous.
Ilya, quickly.
Stocks should like this.
CMG's Chipotle's out here, 25 cents versus 24 expected. Revenues in line at 2.85 billion.
Earnings timeout.
Yeah, there's so many of them. I'm just going to jump in here because I've a lot
We're
of
just
people
going to
are
jump
trading
around here, folks. It'll be what it is.
Why is CMG lower? I see the red line here. Same store sales only rise 5.4% versus estimates of 5.7% expected. Again, if you're trading CMG earnings, this is now out. We still have a few down the pipeline. I'll see if AMD, AMGN, Uber, Disney. I mean, we have a bunch to cover here. So expect me to continue being rude here on overtime.
Oh no, it'll be what it is. I mean, the earnings calendar is stacked. But this then is the question for you if you're watching stock markets today. Okay, the tariffs are not a concern. Okay, the bonds are up on that. We've only closed the gap. We have made no progress whatsoever. We are unchanged on the week.
AMD earnings are at 1.09 on the EPS versus 1.09 expected. Revenues 7.66 billion versus 7.54 billion. It looks like there may be a slight miss on the gross margin. They guided for 54%. The consensus was 54.1. They're also guiding, they're guiding lower. No, that's not fair to say. It's basically a 0.9% increase over the expected revenue. So not as strong here, though. AMD, of course, a big part of that chip story. Trading back down to where it was around 10 o'clock this morning, Ilya.
Mm-hmm.
Go back to what you were saying before I interrupt you again.
That's really it, is you would think that stocks would like this more than they have. You would think that if the DeepSeek thing ultimately ended up being a paper tiger, if this story was even less substance, because it, to your point, Chris, that you were making on last call, this gap got closed even faster. That makes sense. The DeepSeek story at least still has uncertainty around it as to what it means for the AI build out ultimately. The tariffs just didn't happen. So it makes sense that the gap closed faster, but nothing has actually occurred. No optimism has actually materialized in markets. Now, maybe what they're waiting for is what we're seeing now, right? We're talking about a stream of earnings. Maybe they didn't want to front run that. There was a bunch on the menu. Google was a part of the reporting. The tariffs on China didn't go away, and part of China's retaliation is an investigation of Google. Maybe that's why. That's sort of the generous version of the estimation. But we are, for all these shocks that are apparently nothing, still off the highs and still setting lower lows when we look at the big stock indexes going to the tops from the beginning of this year. And the range from December, still undefeated. So where is this confidence that we're supposed to have?
Well, one thing that did spur the market higher today, when Tom and I were on right at 10 o'clock with Victor, we noticed that stocks took a leg up from about 60.22 and change, sharply unchanged on the day, to about 60.50, where they hovered for the rest of the session. And they're still right around there now. The JOLTS report came out this morning, Ilya. Job openings in the country, if to shift away from Trump for a second and think about what the Fed may be looking at this week, job openings for the month of December fall sharply. They dropped by 556,000. We're now looking at a market where, after seeing a little bit of a bump the past 2 months, maybe some of that election uncertainty was subsiding that was there in September. As Trump's odds rose in the polls, they're now seeing the job openings taken off the board here. Now, granted, I know the Trump administration is trying to reduce the size of the federal workforce, but it's not doing so by 556,000 people in the job openings on usajobs.gov. So my question is, are we looking at more normalization here in the JOLTS figures, pre-Trump, or rather pre-COVID, during the first Trump term? You're looking at roughly 7 million job openings, between 7 and 8, as a typical normal run rate. Do we need to be alarmed by the fact that there are 556,000 fewer job openings nationwide right now, or just part of normalization?
I don't think there's anything here to point a finger at, especially since these are somewhat delayed. As we know, of course, JOLTS is a report that's a month behind a step from official numbers on things like NFP, and certainly behind indications that we'd get from ISM data, which or S&P Global PPMI data, which is a little bit more timely still. So I don't think this really says much of anything. It is an important downtick, maybe when we look at it in context in a few months, if we keep building from here. But right now, this seems to be sort of within the range of oscillation, month in, month out. You can see the rate of change on your chart there. I think that's a screenshot from Bloomberg.
Zero hedge. Yeah.
Looks
From
like the
Zero Hedge.
Bloomberg,
Yeah, Bloomberg.
the Bloomberg terminal here. So definitely data to be.
I'm just putting that out so Bloomberg doesn't come to me and say, "Stop putting our stuff on." We didn't.
Well,
I took this from someone else.
You're offering attribution, as they say.
Yeah. Exactly. Don't you worry, Bloomberg terminal. We don't have access to you.
My citations, Dylan, are often to head off liability, not to show that I'm correct.
Attribution to prevent litigation.
Yes.
Mainly.
Yes. Yeah. So we can see here from basically the beginning of 2023, right? The range on monthly changes has a kind of bottom around where we are now. And yes, it's choppy and not perfect, and that's fine. But a swing of about 500 in a given month is give or take normal. And so it doesn't look like anything in particular here, and Fed policy expectations have interestingly held against this backdrop. I think the larger issue on the data front is going to be ISM tomorrow. The manufacturing numbers earlier in the week were unexpectedly strong, and the inflation component there in particular surging, fastest price growth since May. We already had the fastest price growth since early 2023 in December's service sector report, and that one tends to front run official CPI and PCE by about 2-3 months, give or take. So if you get a situation where the service sector now follows, and you get another sharp jump, especially in the price component, that's a much more relevant Fed story, I think, than what JOLTS are telling us at this point.
You see here that year-end Fed funds odds, we're seeing that rate cut odds creep up today. In fact, rate cut odds for the end of the year are higher today than they were at the close on Friday, if only to kind of contextualize how the market feels about all these tariffs. Now, that's not to say that the tariffs aren't going to have an impact, right? I was bleeding on about the Fed model here, and I have it written down, but we're going to do it from memory. We're going to do it live. Oh, here it is, Trump tariffs. The Fed model from the first term, as I said on first call on Sunday night, and as we talked about yesterday, assuming these tariffs against China, Canada, and Mexico all went through, it was a 1.2% hit to GDP and a 0.7% increase to core PCE for inflation. But if you take Canada and Mexico out of that equation, right, let's assume that this is just a negotiating tool for those two countries. And for China, it's more serious because, as we saw with the first Trump term, the trade war began and Biden kept those tariffs in place. So let's assume that those tariffs do remain in place. That's only 0.2% off of GDP with a 0.1% increase to headline, or rather to core PCE. If we think about where we're starting from right now, with growth still between 2 and 3%, Although if you look to the Atlanta Fed's most recent update for growth, they see that first quarter growth is at 3.9%. It's early, but it's been hot. So if we're starting somewhere between 2 and 3% in growth, and we lob off 0.2, and we're starting at 2.6 in core PCE year over year, and you bump that up to 2.7, is that going to materially impact the Fed's ability to deliver on 2 cuts in 2025? Probably not. Unless something more destructive happens, unless you get that big negative Mexico-Canada tariff scenario where we hold a gun to our own head and shock the economy. The Fed can probably cut. The inflation uncertainty that exists goes away. But I feel pretty strongly right now, coming out of the last 2 days, thinking any conversation that we have with Canada and Mexico is merely posturing. We should be more concerned about what happens with China and the EU. I know the market's up today because we did have the China tariffs go into effect last night, 10%. But unlike Scheinbaum and Trudeau, who made it very clear and publicly known that they were going to talk to Trump as soon as humanly possible to try to avoid the tariffs being imposed, there was a notable headline today that took the market lower midday, if only for a little while, that Trump and Xi Jinping were not scheduled to speak in today's session. And that was small. It was only for like an hour that the market really held down. But I think that's an important indication here that China is not going to come to the table like Canada and Mexico did. It is not reliant on the U.S. the same way Canada and Mexico are. And I think that's also instructive for how we should expect the EU to proceed. I can't imagine that we're going to have Trump declare tariffs on the EU and the EU come hat in hand and say, yeah, sure, we'll give you whatever you want to resolve this. The EU sees themselves, Ilya, as you point out, there are 3 stools or 3 legs in the stool of the global economy, the US, China, and Europe. And the Europeans certainly think themselves as, a great power, at least in that sphere, collectively as being somewhat of a great power.
I mean, rightly so. They are the world's largest economy collectively, even bigger than the U.S.
So being desensitized to tariff headlines is not exactly the way I would put it. I'm desensitized to the tariff headlines regarding Canada, Mexico, maybe anything in the Western Hemisphere. But when it comes to China and Europe, those are the ones that we still need to take seriously because we have not.
We did get some indications from
yet.
Europe. We did get some indications from Europe overnight that they are going to have a quick conversation with the administration, that they're basically preparing to have that talk to head off tariffs. It seems like the Canada and Mexico example, and probably the Canada example in particular, was most instructive. You probably get a situation here that is not dissimilar from what happened there, where you get commitments to spend more on NATO, say, things that were already going to happen, and you get, oh, well, see, there we go, we did a thing, and those tariffs go away. Obviously, the Trump administration is yet to announce the tariffs against Europe, so there is nothing to react to yet. The ones on China have been put in place, and the response from China has been retaliation. So that part of it, we'll have to wait and see sort of how this still works out. Both Trump and Xi have said they want to meet each other. Trump has said that he certainly wants to speak to Xi directly. And Chris, you and I have talked about this idea that they seem to want to get a deal rather than to escalate, as evidenced by the pausing of the TikTok ban, that essentially this was left to be a chip to put on the table in some sort of a grand bargain. There was an unwillingness to just tighten the screws for its own sake and go through with even this part of anti-China economic policy, which has sailed through Congress, has broad support. No, the administration wants it as a tool in its conversation. So ostensibly, it is of a mind to strike a bargain. But with Europe, those tariffs haven't been activated. Now, maybe they're coming, the sense is that they're going to happen any day now. But then again, so were the ones on Mexico and Canada. So who knows what all of this actually means. It is interesting that with markets looking at really a thematic unwinding, not just the unwinding of a particular set of tariffs that were here and then not, but the thematic unwinding of tariff risk as we sort of learn what they are hasn't been more supportive.
Dylan, tomorrow we have more earnings releases out. Novo Nordisk in the morning, Disney in the morning, Uber in the morning. After hours, Qualcomm, Baba, ARM, some of the names that Tom was talking about on last call. Let's stick with this China tariff story, though. Chinese stocks here do trade higher over the course of the session, 2.36% in FXI. We get over to A shares, which I know is Ilya's preferred metric. That's higher by 1.48%. China puts a tariff on U.S. energy in response to our moves to put that 10% tariff on last night. If Ilya is correct here and that this is just merely the U.S. putting a bargaining chip on the table, right, to incentivize an actual discussion, what's the downside? Rather, should I say I know what the downside is to losing money? When will we know that our boy who cried wolf mentality is wrong? When should we doubt that being the appropriate way to proceed moving forward?
I mean, don't you think that's right now? I mean, with all due respect, I feel like you've just witnessed exactly what the Trump administration is, which is extraordinary threats against our closest allies that are preposterously meaningless. And so now should we not shift to a reality where until the president implements his threats, all threats should be discounted to the utmost degree?
Full stop.
Full stop. If the president says something, obviously it's meaningless, obviously it's an opportunity until it's implemented.
Russell roars back today, 1.48% higher here. In terms of our sector performance,
and again, by the way, here's another one. Gap close, no progress.
Oh yeah,
still under that, still under last week's range.
Metals are the best performing sector here in the S&P, up 2.72%. Oil services are close second, up 2.59%. Likewise, XOP, big gainer, 2.43. And then we can go into the metals, GDX, GDXJ. Those likewise are doing well on the upside. There are 25 sector ETFs that we track here on over time. 21 of those 25 were higher. In terms of the losers, utilities, XLU, mirroring the move that we saw in natural gas prices today. XLP, which is interesting because alongside XLV, healthcare, those are defensive sectors, and the defensive sectors are the ones that are lagging in today's session. XLF also lags here, but KRE is a top performer as well, up 1.91, leading the Russell. I look at the sector performance here, and I see people chilling out. I mean, Dylan, I feel like America would just do so well to lighten up, Francis, from the movie Stripes. Like, lighten up, Francis. The sector rotation is fine.
Don't take life so seriously.
Right.
Don't take the president so seriously. Don't take tariffs so seriously.
Don't take yourself so seriously.
Don't take yourself so seriously, and buy yourself some S&P futures. That would be the simplistic interpretation of the current market / political reality.
And I would agree
Which, by
with
the way,
you if your time horizon was a year or two.
To my detriment. Sorry.
No, if your time horizon was, but if you approach this as to say, oh, the tariffs are a catastrophe, this is Smoot-Hawley again, this is going to engineer a horrendous global cycle of tit-for-tat retaliation, things are going to collapse, this is immediately encouraging of the unlocking of the bunker, the wearing of tin foil, the loading up of canned food storages, et cetera, et cetera. I mean, obviously, this is not that.
Do you have cameras in my home? These are all the things that I do after overtime.
So he's bullish on air, but behind the scenes, he is prepared.
I'm at the gun range and lifting weights 24/7.
I'm bearish on air and chilling behind the camera.
See, I get off camera and I put on a cup of coffee. I hit the gym, and it's like now the work begins, right? Like
Marlboro Reds in the bunker, long
just chain smoking.
I waltz over to the refrigerator, get a nice local micro brew, and sit down.
No problem.
With a glass of wine.
It's all good here in
Portillo.
Northern California.
I was over at Portola looking for the new band.
Yeah, I mean, I'm looking forward to the Metallica tickets I just bought, surveying the microbrew selection in the back of the fridge and whatnot.
I'm looking forward to using my whetstone to sharpen my knives later tonight.
Vecchio has more money than the rest of us. Let's be honest. Okay, he's making more money. He's strung out. He's got lung cancer.
Constantly panicking.
But he's fucking rich. Okay, so it's a trade-off.
That's the trade-off. I wish that were the case. It's like half true. All of it up to
the
being
lung
rich.
cancer, sure. But the
That's
rich,
true.
not so much.
The strung out, the bunker, all that's true. The being rich is not true. But hey, maybe gold gets us there. Today I placed a small adjustment here along the 2850 call spread at 21 days to expiration. It was time to roll that out. I'm now further out, looking at the 2950 call spread, the long 2950, short 3000. The first one was 50 points wide as well. This one is structured in a way that if it does go to max loss, then it will consume the entirety of the most recent winner, which is fine because it's still a 3-to-1 risk to reward, and this thing looks like it just started to break out. So I'm good on gold. I got more time there. I still have my exposure in silver. Dylan, I've been trying to lure you into a Hunts Brothers trade with me where you and me can each buy a single silver futures contract and corner the market.
Let's corner that thing.
But it feels good, right? I mean, like we didn't quite take out the high that we had from mid-December, but this is looking a little bit more like we could be in for a turn. Ilya, are you surprised?
Market.
Yeah, with a one whole futures contract, not even a whole futures contract, a call spread. So, Ilya, are you surprised the way that copper, gold, silver are performing net on the other side of these tariff news, or in a world where people say want to move away from a U.S.-led dominated financial system, not necessarily to BRICS, but let's call this as part of that same puzzle piece. Sanctions unlock in Europe. Russian money leaves Europe entirely, goes into the hard assets. Are the hard assets rallying here because people are looking at U.S. leadership as, well, not really leadership anymore?
Not even remotely. U.S. leadership is completely unquestioned by anything that's happened here. I think it's much simpler than that. What did we just end up saying? If we don't have the tariffs, if the tariffs aren't real, then whatever reflation component was due to them in the outlook is probably not real either. So what do we get from the bonds today? They're higher. Yields are in. When yields are in, precious metals tend to like it. Not surprisingly, here they go. The dollar is a little bit weaker as yields come in. Thankfully for me, I almost had a conniption yesterday as the Australian dollar in particular was falling apart. I'm back long the Canadian dollar, now at a better level. Thank you, Trump tariff shock. You have bought me some additional pips. And so what I look at here is just a very straightforward dollar lower, yields lower, so metals higher kind of a thing. It could not be more textbook.
Brief interjection here. AMD has its earnings out 109 versus 108 expected. Revenues higher, 7.66 billion versus 7.53 billion. All that seems good. Their guidance is a little bit weaker, however. And I think ultimately that's what people are looking to now for the semiconductor stocks. Will the capex that the big tech companies have allocated the money for, will that continue in the wake of the fact that we could build AI models that are just as good for cheaper in the wake of the DeepSeek news? AMD shot up to about 126 a share from its closing level, right around suppose we're going to call that what, 119.5, back down to 112.86 here after hours. And as we go into that after hours move, NASDAQ still shedding a little bit under 21,600 now. We'll call it 80 points off of where we closed. Dylan, there's 13 minutes left here in the day. Energy prices have been a friend of the show for a long time. We've had some good opportunities in oil over the years, fading geopolitical risk. Today, the market stages a pretty big turnaround. We were trading much lower on the session, down to $70.67, but we closed back to $72.70. Trump pointed out here in this afternoon that he thinks that Palestinians need to leave Gaza. The Arab ministers of state in the past 24 hours have released a letter, I think it actually came out this morning, Eastern Seaboard time, that they think relocating Palestinians out of Gaza into Jordan or Egypt is unacceptable. I know it's not in the spotlight right now, but there is a noticeable turnaround in crude today, an uptick in oil volatility, 28.7 IVR again. Are we understating geopolitical risk in this environment right now, is my question to you, sir.
Are we underestimating geopolitical risk? No, we are not. Geopolitical risk is exaggerated as a result of the lunatic American president who glorifies himself by virtue of hyperbolic rhetoric that is followed through with non-existent action. So if anything, geopolitical risk is excessively amplified, and any decline in asset prices as a result of that amplification is an opportunity for the millennial bulls such as yourself.
Ilya, how do you feel about geopolitical risk here? Taiwan, Israel, are we understating it?
We are, if anything, overstating it.
Why do you feel that way?
I think the situation with geopolitical risk has become much, much, much less significant because everything that we're seeing here, I mean, first of all, the Taiwan situation is a non-starter. The idea that China, in its current enfeebled economic state, while it's trying to deal with Trump tariffs, is going to launch a costly war, which it is, never mind, not guaranteed to win, but even if it does win, it will be hobbled to such a catastrophic extent that the cost may not be worth the prize, and in fact almost certainly isn't worth the prize. The idea that China is going to do that rather than use Taiwan as the perpetual bargaining chip that it has been using it for and have free leverage versus an expensive war seems to me ludicrous. China is not dumb. They are not going to go spend all kinds of blood, all kinds of treasure that they don't have and can't afford on something that is working beautifully for them in the limbo that in which it currently exists. So they're not going to do that. I think that risk was always a non-issue and remains a non-issue. All the more so a non-issue now, given how weak China is and the tariff conversation that's happening with Washington and the idea that Washington seems to want a bargain, as we've just discussed. So, and China, by the way, has reciprocated. They've suggested returning to the phase one deal that the Trump administration stuck with them last time. So we can agree to buy more soybeans, not buy them again, but then everything will be fine. So I think Taiwan is a non-issue. In the Middle East, the situation has become only more favorable because all of the so-called axis of resistance, the Iranian sphere of influence in the region, that is really at the heart of muddying those waters, that force has been reduced to a nub of its former self. Iran has nowhere to go. Its main non-state forces, Hezbollah, Hamas, have been smashed to bits. Its main ally, Syria, is no longer its ally. In fact, we've heard from the new government now, provisional though it claims to be, that they're eager to reestablish contacts with America and that they see Iran as an enemy. So, not surprising for adversaries of Bashar al-Assad. So the situation has only become less combustible. Iran is in no position to do anything assertive here. They are, of course, much closer to a nuke. So if they were, let's say, desperate, they would need about 12 to 18 months to cobble together a delivery system. They could get the fissile material for a weapons-grade nuke probably within a matter of a week at this point, since the initial Iran nuclear deal was scrapped by the first Trump administration. They've ramped things up, so they can probably enrich enough for a bomb now within about 5 days, 6 days, but they need a vehicle to deliver the warhead, and that's probably something that's about a year out. Other than that, there isn't much for them to do, and they clearly don't have the appetite to do such things. Part of the retaliatory strikes that Israel took when they were shooting at each other last year was it basically took out all of Iran's air defenses and all of their missile capability. So if they were to try to build a nuclear weapon delivery system, it's very realistic to think that the Trump administration would give Israel the backing and the green light to take that out, and the air defenses to do that no longer exist. In fact, we've been talking about in Congress, there's been members of Congress that have said, well, just go smash Iran now. Just get it over with while they're weak. So the idea that we are somehow closer to escalation doesn't seem like what's going on. It seems like actually it's the other thing. There is no adversary that wants a fight here. One side lost.
Dylan, speaking of this geopolitics, I saw a quote, and one of the reasons why I bring this up here, I saw a quote from Putin today regarding Europe and Trump. And he said yesterday on the Russia One state TV channel program, Moscow, Kremlin, Putin, he is the subject of the show. He says, quote, "I assure you, Trump with his character and his persistence, he will restore order there quite quickly. And all of them, you will see, it will happen quickly soon. They all stand at the feet of the master and will wag their tails a little. Everything will fall into place." What is he referring to? He's referring to Europe. Putin says that Trump is going to restore order in Europe. What does that mean when it comes out of the mouth of one Vladimir Putin?
What does it mean? I would say it means that the Russian president is fucking with you and that he is playing with you, which is his number one skill set. And he knows that Europe, along with, there's this sort of mid-level, I'll call them mid-nation states. Canada, mid-nation state. Mexico, mid-nation state. The entire European Union, collective mid-nation state. Their entire objective is to never be forced to decide between China, Russia, or the United States. Never make me choose. Let me be friend of U.S., let me be agreeable with China, let me be, benign with Russia. Like, let's make this a non-issue. And part of the challenge of Trump, to his credit, really, is that he's forcing everybody's hand and saying, are you with America or are you with Russia and China? And you must choose. And, despite my personal objections to President Trump, which are virtually limitless, I do give him credit for forcing the hand of these mid-nations, specifically the EU, Canada, and Mexico, to either express a preference to become subordinate to America or to abandon America and become subordinate to the China-Russia alliance. It's a terrible position for Europe. It's a terrible position for Mexico and Canada. I have to think that at the end of the day, they express preference for America, which, set it all aside, from a trading perspective, if that's a forced decision, is it better for Europe that it expresses an American preference versus a China preference, right? Like basically the next year will be, are you with me, America, or are you with them, China? And if you're Europe, they're going to say, we're with you, America, even if it's in sort of some submission, some version of submission, much like we've seen with Canada and Mexico.
Well, with that, Overtime is out of time for this Tuesday, February 4th, 2025. We'll be back tomorrow, same time, same place, right after last call, 4 p.m. Eastern, 3 Central. That's every Monday through Thursday. For Dylan Radigan and Ilya Spivak, I've been Chris Vecchio. Good luck trading. Of course, Tasty Live is back after a brief break. Ilya Spivak's here with more macro money. See you there.
See you there, everybody. The dust is settling on the tariffs that were there, then not, then there, then not again. But stock markets seem unusually circumspect. We're going to explore what all of this might mean here on Macro Money. This is Ilya Spivak, head of global macro here at Tasty Live. And the immediate sort of aftermath of what we've just seen continues to kind of reverberate around the markets here. And the first question that immediately comes up is, should stock markets be higher relative to where they are now? Is it unusual that they're not? What might all of it amount to? What is it that we seem to be afraid of? So, needless to say, it is important in this context to look at how stocks responded to the tariff news as it arrived and how that it ultimately turned out when it ended up being less than what it was advertised to be. So this is the initial response in yesterday's session. We can clearly see stocks not liking the news. This is already a substantially mitigated sell-off. We were looking at much deeper losses, and by the end of the close yesterday, we already had Canada and Mexico looking like they might avoid tariffs. Canada was unconfirmed, but Mexico was. And so these are significantly diminished losses. And we clearly see that the response ends up looking like the market said, oh, some amount of tariffs may be inflationary. We'll get to the meat of that in just a second. So the yield structure gets a little bit less accommodative at the front end. The long end stays steady. Stocks don't like higher yields in the near term and come off. We get some U.S. dollar strength all around, in particular visible in the euro. Interestingly, the yen manages to hold up despite it all, as the risk aversion seems to encourage yen buying and a kind of safe haven adjacent move. You typically see the yen rise in defensive markets as people unwind their short yen exposure in carry trades that are sort of inherently stocks tracking and sentiment anchored by their nature. So not surprising that there's a negative response. And then, of course, after the close, Canada likewise escapes tariffs. We get a press conference with Canadian Prime Minister Justin Trudeau, and it turns out that he's had a conversation with U.S. President Trump, and they've shelved those tariffs for a month, much as Canada shelved its version after the conversation between the president and Mexico's president, Claudia Sheinbaum. So we end up with just the tariffs on China. They are an additional 10% on top of the multitude trade barriers already facing China, introduced in the first Trump administration and in the Biden administration. And so that part of it unresolved, but also not exactly a status quo departure in the grand scheme of things relative to what was going on with Canada and Mexico. And here's what we then see. And this is performance week to date. And this includes a further recovery in equities today. This includes the initial gap and sell-off. And what we end up seeing is strangely muted. S&P on the week, still a little bit lower, despite the fact that the supposed risk, or at least the meat of it, has gone. The NASDAQ flat, yields a little bit lower at the long end and basically flat at the front end. Gold substantially higher. The dollar doing relatively little on the whole. The broader pairing with the euro showing we are now basically unchanged on the week after a rapid dollar rally when this tariff news arrived, and an almost complete erasing of all of it as the tariffs went away. The yen is higher still. Now, lower long-term yields and a higher yen, all that seems to make sense. Those things operate together. Lower yields help to encourage that carry unwinding, as does risk aversion. And so the yen strength here relative to what the long end of the curve is doing and relative to what stocks are nominally doing, that makes sense and seems to offer a degree of reinforcement, suggesting that this is in fact the real read-through. And of course, what then comes to mind is, well, why are stocks not up when the thing that ostensibly drove them down at the weekly open has all but dissipated? And here, the question really comes down not just to the episode, but to the essence of what tariffs have been in investors' economic outlook. And here we have to look all the way back to the middle of September and note that inflation expectations have been marching higher since then. Now, needless to say, the tariffs are not the only reason why this is occurring. In fact, we learn very quickly with the Fed's policy announcement mid-September, that's right here, that the markets believe the Fed is more dovish than makes sense. And part of that is a reheating of the U.S. economy. By the time the Fed gets around to its very dovish policy guidance in September, when they call for 100 basis points in rate cuts in 2025, part of that clearly the markets think is implausible just on growth grounds. And as a matter of fact, if we take a look at what U.S. economic data is doing by the time the Fed makes this announcement, we can see here from the Citigroup Surprise Index that measures U.S. economic data outcomes relative to forecasts, we already at this point have a situation here where the data is improving. But almost certainly another component of what is going on here is the bit having to do with the election. Now, by this point, you already have a sense in markets that the outcome is likely to favor a return to a Trump administration. And of course, you get that confirmation right here. But already into this, the expectation is that if Trump were to win, that the main pillars of his economic policy, of which tariffs are one, are likely to be inflationary. More economic growth through tax cuts and deregulation, that's inflationary because with growth, more money starts changing hands. Economic activity and the velocity of money